Students, good afternoon.
Good afternoon, Professor.
Good afternoon, Professor.
Good afternoon, sir.
Yeah,
Hi, Professor. How are you?
Good. Doing very well, thanks. We've got about 18 participants so far, but we have to start the class for lack of time. I just explained to a few who had joined earlier. What we'll do today is for an hour and a half, regards this assignment 2 presentation, we will go ahead with the explanation of how to go about the business plan and pitch very quickly. And as requested to Professor Santosh, he will discuss a very small bit of the 3 financial statements. Post that, after a small break, we'll start with your presentations, whoever is ready for today. And if it spills over, maybe tomorrow afternoon, we'll take the presentations and finish off. So essentially what you learn today, you can incorporate it while you put it up the PPT on the LMS. Clear, all of you?
Yeah, clear, Professor.
Yes, sir.
Yeah, clear. Any doubts? Fine. In such case, we'll proceed. We'll see from my end, which was supposed to be completed for the assignment 2, is the business plan development and the marketing plan development. Like I said, we'll go through it very, very fast. But like usual, if you have any doubts, kindly stop me and ask me the doubts. Business plan. What is it? Basically, it is a written document describing relevant internal and external elements and strategies for starting a new venture. It integrates functional plans. One moment. It addresses short and long-term decision-making for the first 3 years of operation. So this is an important thing for you to understand. Ideally, it is best that you split your business plan for the first year, first 3 years, and the first 5 years. Who prepares it is the entrepreneur in consultation with relevant others. It requires objective assessment of individual skills. Essentially, when we try to start up something, we are emotionally attached and we usually try to give unrealistic figures, but then give an objective assessment of individual skills. This also is important. So you will have your team or sort of the team that you will have in the particular business. Assess the team as per the skills that they may have. Somebody may be good in accounting and taxes and forecasting. Somebody may be good in marketing, research, and sales. Likewise, if you do not have all the people in your team, or you do not plan to employ all the people in the team later on, doesn't matter, you can always have outsiders doing the same for you. Scope and value of the business plan. First of all, when we prepare a business plan, we need to understand as to who it is intended to. Who will actually have a look at it? Who reads the plan? Tell me who reads the plan?
Venture capitalists.
Yes, the people whom you are seeking investments from. It need not be only venture capitalists. It can be angel investors. It can be anybody who will invest. It can be debt, equity, financing, whatever it is. So that you please keep in mind. Scope is determined by who is expected to read the plan. Now the plan is equally important for you as an entrepreneur as well, for your team who are working on the project as well. For all of you it is important, but essential goal, the objective to make a business plan is to secure finances, and that is the intended people who are expected to read the plan. A plan should consider marketing perspective, investors perspective, and entrepreneurs perspective. So while we divide the business plan, which we'll see soon as to how the particular divisions will come up, you will see all 3 perspectives are clearly covered. Depth and detail in the business plan depends on how big the venture itself is. This is again a very important thing for you to understand. If you're starting up a small restaurant, which is also a good entrepreneurial venture, the scope and size will definitely be smaller compared to if you're wanting to start a huge agricultural project which will affect the economy of a country, for example. So there's a difference there. It depends also on the size of the market. Take the same example of a restaurant. You are mostly localized. If you tie up with Swiggy, etc., maybe you will deliver it or they'll deliver it on your behalf. But then the size of the market is smaller. Take again the same example of a huge, a national scale agricultural project. The size of the market is huge. Competition. This is very important for any business, irrespective of whether it is small or big. Potential growth is something that you will consider and put it very objectively. You should be very, very clear that, and most people who invest, the venture capitalists and the others, they know when they look at a business plan that most of the figures are on a higher side. Doesn't mean that you should stop at a lower end. It just means that they know about it. But what is very important for you to understand is you must mention the potential growth. Like the ideal scenario I told you, it is 1 year, 3 years, and 5 years. Sorry. Business plan is valuable because it helps determine the viability of the venture in a designated market. So this is a very important point where many things are put in perspective. You yourself as an entrepreneur who is wanting to start the business or have just started and getting onto the business, you will understand whether this business will actually make a good business in the future or not. So a business plan, if done comprehensively and properly, you yourself will be able to know and understand whether it is a feasible business option. Having said that, it doesn't guarantee success, but at least you have a very clear knowledge as to how it can perform in the future. It guides the entrepreneur in organizing planning activities. So all the activities which you are planning, you will be able to organize them properly. Serves as an important tool in helping to obtain financing. Going back to the first point, who reads the plan? So the goal, the focus for a business plan is to obtain funding by giving all relevant information. Hope this has been clear so far. So how do potential lenders and investors evaluate the plan? The business plan will reflect strengths of the management and personnel. So if you look at it, the team is clearly mentioned in a business plan. So those of you who want to make notes, please make notes. Mention about the team, why the team is important, how are they relevant to your own business. Next is the product and service. Very important to mention how differentiated you are compared to the others who are there, who possibly there in the market. Available resources. Mention that also clearly in terms of the resources required for the business and the financial requirements. Lenders are interested in the venture's ability to pay back the debt. See, we usually go to vendors, and if you look at the general scenario across the world, all these capital investors, venture capitalists, all these people are looking at exiting the business, which means making the money in the business in about 3 to 5 years time, not more than that. So I do remember a particular business plan of mine, which I took it across to a huge organization. They accepted it, but they said it's going to take much, much more than 8 to 10 years to actually make it a business. And most of the investors would not be interested. So that's important for you to understand. Focus on the 4 C's of credit: the character, cash flow, which we'll discuss later, collateral, and equity contribution. So this means the collateral, of course, we'll not get into because we'll not look at banks as a sourcing opportunity for us. Banks definitely are interested in analysis of the business opportunity and risk. Investors understand this. Investors emphasize on the entrepreneur's character. They conduct background checks. They demand high rates of return, and they focus on market and financial projections. while presenting the plan, what you should take care of, you should focus on why this is a good opportunity. Mention it very clearly upfront of the business plan itself. Don't beat around the bush and get into it later on. Provide an overview of the marketing program. Marketing plan, I will very, very quickly go through today, again for lack of time. You address risks and how to overcome them. By saying there is absolutely no competition for me when I launch my business will be a very foolish idea, and you will not be considered as a serious business person there. So make sure you calculate the risks which are there, which may come up as much as possible. The risks also are competition. So when you negate the competition and start to say, no, my business is the best and nobody has launched anything like this so far, it may be true, but then there could be competition who are indirect. Please do not forget that. So both direct and indirect competition, you should take into account. Apart from competition, the other risks that you foresee should be put in place in the business plan. Even in terms of some points, it is fine. Okay. Elevator pitches, we'll get into it later on. Information needs for developing a business plan is establish well-defined goals and objectives, undertake a feasibility study. So which is before you get into actually pitching your business plan, the main important thing you can do is in small ways, you can start to try out your business, whether it's going to work or not. That's called a feasibility study. Information for a feasibility study should focus on marketing, finance, and production. Okay, this I'll not go into. Operation also I'll not go into. You can, if you are starting a unit which is into mostly manufacturing, these things you must consider in the business plan itself. That is operations information. Again, it is mentioned here, all these will be shared with you by the end of today. So you can go through it. There's nothing much to explain on that. Financial information needs is extremely important for all of you to put in your business plan. Prepare a budget listing all possible expenditures, forecast sales revenue on the basis of market data, identify benchmarks to prepare the financial performance statements. To help you with preparing the financial statements, again, I'm telling you, it is not expected that you will do 100% job of the 3 financial statements, which will be explained by Professor Santosh later on. But make sure you try to incorporate as much as you can into your business plan before you put it up on your LMS. Again, this is not something which we have to go through very much. Use the internet as a resource tool is extremely important. I'm sure all of you with your own business ideas have done it. You can, it gives you a lot of information of the industry that you're wanting to start your business in, of the competitors who are there, and a lot of things you can get from the internet itself. Now, this is very, very, very important. If you have done it like this, great. If you've not, no problem, don't worry. Ideally, a business plan starts with an introductory page. See, this is not written in stone, and it's not saying, I'm not saying in any way that this is the flow. You could change the flow a bit here, there, no problem. But you start with the introductory page, which means you generally say this is what we are and this is what we are getting into. Executive summary, we'll get deep into it later on. Then you have the environmental and industrial analysis. Environmental analysis is assessment of external uncontrollable, that is your pest analysis. So you will know about it very, very, SWOT analysis, sorry, not the pest. We'll not get into so much into environmental analysis. SWOT analysis, strengths, weakness, opportunities, and threats. Industrial analysis reviews industry trends and competitive strategy. You will describe the venture by giving a complete overview of your products, your services, and your operations. Okay, this is essential business. Getting into it. For environmental and industrial analysis, how to go about it is what is mentioned here. This is for your friends. This is very, very important. describing the venture. Out of these questions to be answered in the business plan, I'm not saying you should take all of them. Take what is important. The most important things are, what is the mission of the new venture? What are your reasons for getting into a business? Will you be successful in this venture? So what are the products and services that you're offering? Describe them. If it is a physical business, where are you located? So, and then you go on with it. Okay. Take only the important questions that you need to answer in your business plan. In your business plan, you could write, I'm not saying you should, you could write the production plan, which details of how product will be manufactured. Marketing plan is quite important because it is a smaller part of a business plan. Marketing plan is very, very important. It describes market conditions and strategy related to how the product and service will be distributed, priced, and promoted. The 4 P's, you can look at it in the marketing plan. So do not get confused with the business plan and the marketing plan. Marketing plan is mostly your study that you do in terms of how you finish off with the 4 P's. Organizational plan describes the form of ownership. Are you starting a proprietorship, a partnership, a private limited company, a LLP? Obviously, you will not be starting a public limited company, right? Lines of authority and responsibility. Who is responsible for what and who will manage the entire business? Who will be the owner of the business? What is the assessment of risk? What do you think will be the potential hazards? And if so, what are your strategies, alternative strategies to meet goals and objectives? If all these cannot happen, then you have to pivot. Pivoters, you will change your idea of the business, either in small ways or fully. Financial plan is the 3 financial statements, pro forma financial statements for the next 1 year, 3 years, and 5 years. To make it simple, you do it just for next 3 years, if you can do it, and upload it on the LMS. Finally, you will give the appendix. Again, this I will not go into. Business plan, again, is not a static document. It is, you will be changing the business plan as and when needed. There are many instances where the business plan started off with something else and became a lot different in maybe 1.5 years, which I myself have seen, right? The reason is because COVID happened, for example. So you'll have to alter a few things. You'll have to change a few things and then only get into the business. So business plan is a document which can be changed as and when you feel is really needed and according to the circumstances at that particular point in time. Why some business plans fail? This is just for you to understand, going through it very quickly. Unreasonable goals. So because we are so attached to our idea and emotionally also, and feel that no, we will definitely do a lot. And it's not just for small startups. This happens even for large, organized, well-established companies. They go on with unrealistic goals and non-measurable objectives. Or it could be, okay, I'll do the business, but I'm not committed towards it. So the lack of commitment is a problem. It could be because of the family or other reasons. Lack of experience in the planned business. So here I'd like to mention the average age of successful entrepreneurs across the world is something like 45. The reason is they have the experience in a particular business or many businesses or many industries, and among that they choose one which they feel is really good for them. So with experience and the knowledge comes the idea that this is a business that could succeed. So essentially there is a graph that has been found out, because if you have some experience in a particular line, it is, I'm not saying it will guarantee success, but the success rate could be far higher than, for example, if I get into aerospace manufacturing. I know nothing about it, right? No sense of potential threats. So we ignore the threats and weaknesses. We do not do the proper research. And this is not done once, this is done quite often, almost continuously. And then you can come up with products where there has been no customer need and for the product or service. Look at the 3D scenario as such. The 3D for personal usage has never really picked up, though it's a beautiful invention. It's never really picked up. So there's no customer need. Okay, I'd like to watch possibly a movie going to a theater in 3D. Apart from that, there came 3D TVs, there came 3D phone also, but it actually failed. So was there a customer need? Was there not a customer need? There are a lot of such products you can come up as examples, but then you will know that if there is no customer need, any product will not work. I was just going through a video of Segway. Segway, I think you must remember that you might remember that I explained this long back. Actually, it was a flop as a large customer usage of Segway. It didn't work. Only the police officers somewhere are using it, right? So essentially, it became a flop. What is a marketing plan? Marketing plan is, I told you, to come up with the 4 Ps, but mainly it is to understand the relevance of industry and competitive analysis. So check what you are and then look at your competition and mention all those things in the marketing plan. And it is used to describe the role of marketing research in determining marketing strategy for the marketing plan. It is to define the steps in preparing the marketing plan. Don't worry too much about it. Go through all these, and if you have doubts, you can always reach out to me. Industry analysis you must do, because if you are venturing into a particular industry, let's say a mobile phone, you should know the mobile phones which are possibly available in your range and the mobile phones which are available in other ranges also, because all those are competition for you. This is one way you can assess your competitors. Competitor A has got similar product service, B, C. So you can possibly make a table and then tick off the relevant boxes wherever applicable. What are the product or services they're offering? What is their pricing, distribution, promotion? What are their strengths and weaknesses? So all these will give you a very clear idea of your competitors versus yourself. When you're designing a marketing plan, which also is a part of business plan, is you define the purpose or objectives, you gather data from, which is usually the internet, which is a secondary source. You gather information from primary source, that is, you actually go about talking to people and getting to know about your competition, and you analyze and interpret the results and then put them in a particular format. You could put some graphs, you could put whatever you want, or data itself. So that's how you do a marketing research for a new venture. Here you'll understand very clearly the difference between a marketing plan and a business plan. Business plan is a roadmap for the entire organization over time. It does not stop here. It is over time. Focuses on decisions pertaining to all functional departments. What are the functional departments?
Marketing, finance, and operations.
Yeah, marketing, finance, operations, R&D, sales,
administration,
advertising. Yeah, all these are functional departments. And future growth strategies. They also look at future growth strategies. Whereas a marketing plan focuses only on marketing activities of a venture. This is an integral part of a business plan. So if you have not demarcated clearly as to the other departments that you have taken in and marketing, you just make sure that you run through properly with your marketing plan in particular. I'm not saying you should do a separate marketing plan, but the plan which you have put up for your own business as an assignment 2 for presentation, make the same probably a little more deeper in terms of your marketing plan, not for presentation, but at least for submitting it. Okay, not wanting to get into it. This is what it is for the marketing plan as such. There are steps in marketing plan, but for again, coming towards the end of the course, I do not want you to go deep into it. Just make sure that your marketing plan that you have put in, make sure it is mentioned comprehensively. That's all I would say with respect to the marketing plan. Make sure the 4 Ps are clear there. Okay. This whole thing I'll share with you so that it will be useful for your examination as well. So how to start, what are the different legal forms of business, which most of you know. I think it's been covered also in your CEI. Financial statements we'll discuss later on. Financing options, what you have, and getting funds for your company. All these will be clarified. One moment, please. So legal forms and all these will be shared. The whole thing will be shared with you. Just go through it later on, please. Yeah, this is from where Professor Santosh will take over later on. But this is about the business plan. Any further questions about the business plan as such?
Not from me, Professor.
No, Professor.
Okay, good.
No, Professor.
Great. So if that is clear, then we'll now move on to the pitch. Very interesting. How many of you, now we have a little time to breathe, at least I have. What have you found out about what a pitch is?
Professor, this is Sagar. I just
Yes,
want to
Sagar.
give it a try. So a pitch is it's an act of taking the opportunity to explain your idea and convince the other person about what you think and how he can help you with your idea. So that is
Okay.
what I think.
Now, a good try. I should say a good try. Yeah, Subhash.
This is
Can I try,
Professor.
Yeah, Subhashmita. Yeah.
You can say the art of persuasion for your product.
Art of persuasion for?
For your product.
You must change the last little.
Okay, maybe.
Subhash, yeah.
Sir, I would like to say.
Yeah.
Pitch
So,
Sorry.
according to
Wait,
me,
please. Subhash earlier wanted to. Let Subhash finish, then I should have.
yeah.
Subhash, yeah.
pitch is basically the first impression that you would give about your business to the investors.
Okay, good, very good. Aishwarya.
Yeah. So, according to me, pitch is a time bound within which we have to explain our ideas correctly to convey what exactly we are going to do.
Well, yeah. All of you are right. The only thing is, a pitch is essentially the summary of your business plan and the way you convey it. There are so many videos available. I'll try and share it later on. There's a beautiful video which given a person on stage, a lot of people on stage are given just a minute, So in roughly about 60 seconds, everybody has to mention about their business plans. So there was there were two different people, one who knew very well about his business, and his English was very good. So he spoke from the technical point of view what his business was. The other person came, his English was not great at all, but then the what do you say, the josh that he had, the idea that he had, and he had married into that particular business so well that though with broken English and not being very confident or convincing, because of the passion that people found out that he had to make a change in that particular social entrepreneurship venture that he was wanting to do, he got all the investments. And not the person who had great English, did not show that much of emotional involvement in the business or passion for the business, and stuck to technical details. So a pitch, people will find the main thing that your investors, when you pitch, will find is how passionate are you about your business. Please note down somewhere, very, very important for you to understand. So a pitch is essentially a summary of a business plan and how passionately you convey it to the audience. Who's the audience? The investors. The art of the pitch. What is a pitch? It's traditionally a summary of the business plan. Nowadays, a standalone business presentation of your business. So what you do in a pitch is taking points from your business plan. First is the solution you're offering a pain point for the customer? I'm sure by now all of you know that there should be a need for your product or service to come into the market. So first thing is there a pain point? I'm coming up with a 3D glass, but are people buying it? So that's a question. So the pain point, the problem should be real. That means there is a particular, even today in most houses, there is no solution for lizards. People are coming up with a lot of things, but it's not fully going away. So there is a latent need. People need a solution for it. It's not necessarily they should be killed, but at least they go out from your homes. That's a pain point. Are you addressing the pain? Second thing is your solution addressing the pain point. First of all, is your business real? Does it have a market? Are there customers who will buy? That's the question that you should ask. Then come up with your solution. But then here you must understand that your solution should match the pain point, the problem. So you cannot give half a solution to the problem. So there should be a match. And have you identified the target market? Have you done research? Have you sold something? Have you checked with people whether they'll buy or not? So that's the target market. Have you identified competition? Like I said, do not undermine your competition. Have you identified your competition? Mention about your team quickly. I mean, in an elevator pitch, you can't do all these. It depends on what sort of pitch you have time for. Financial summary will give you all the three financial statements, projected financial statements for essentially the next 3 years. So, or in a pitch, you're not again going deep into all three statements. You are going to give a projected realistic, please remember this word, realistic figure of your financial projections. I'm here today, I'll be making about 10 crores in the next 3 years. Depending on the business, it will definitely sound realistic. Milestones, when are you achieving what? You cannot just say in 3 years you'll do this. In the next 3 months or first month, what are you going to do? 3 months, what are you going to do? 1 year, what are you going to do? Second year, what will you do? How will you improve? There should be some sort of improvement from when you start the business from the first year to the second year. In the third year, are you in line with achieving the 10 crores? Milestones. Again, like a business plan, the reality is that the pitch changes depending on who you talk to. That's very important for you to understand. See, Sabir Bhatia, when he actually came up with this idea of Hotmail, he never gave up his full idea or his idea itself of Hotmail to everybody. He knew that it could be copied, or he didn't want to waste his time with people who may not invest in his business. That's because he had so much of confidence on his business. And he also did not want people to just take his idea and then copy it and do something about it. Because of the confidence he had on his idea, he would give all sorts of pitches. And only when he found out that somebody is really interested and genuine in investing, would he actually say, I'm sorry, all these are nonsense. This is what the actual idea is. So you can change your pitch depending on who you talk to. Sometimes you'll be talking to a customer just to find out whether they are willing to buy your product or is there a need. You can talk to a supplier or partner, future supplier or partner. You can talk to a scientist, it'll be different. You can talk to an investor. Now we'll focus entirely on the investor, right? And it also depends, your pitch also depends on whether it is high tech or low tech. If it is high tech and if you feel the investor knows about something about the business, then you can mention all the jargons of high tech. If not, stick to the basics. Who should be pitching or selling at first? Who should be pitching? Your business idea, who should be pitching?
The entrepreneur, sir.
Yeah, whoever the owner of the business or main people from the team. So there are many types of pitches. There's a high concept pitch where you have a lot of time and you get deep into the technicalities. There's an elevator pitch, which we'll discuss. There's a 2-sentence pitch. is, let's say I am coming up with an agricultural solution. So a 2 sentence would be, I'm trying to help the downtrodden farmers by improving the economy of the country. That could be a 1 sentence actually, but then that's how you could make it a 2 sentence pitch. Ideally, in many platforms across the world, you will get at least a minute to pitch. That's the formal occasion to pitch. So that 1 minute pitch, what you can do. And 5 minute or longer pitch is essentially the full summary of your business plan. So it all depends on who has what time and which podium you are in. High concept pitches, you can start with one word that you are Facebook for, or like Facebook for professionals. What is Facebook for professionals?
LinkedIn.
Correct. Correct, Vishal. What is all electric Porsche? Very high concept. You just are mentioning just a few things where people will grab the idea what it is.
Tesla.
Yes. Google for pets that use Amazon. Nothing like that. So don't come up with pitches like them. The high concept pitches like this and then get people confused. Nobody will understand what it is because it's meant to be, anyway, we'll not get into the high concept pitch. It can then reel off into a lot of technical details. It all depends on who you're pitching to. So 2 sentence pitch is for target audience who has a need. The product name is a product category that offers a key benefit. Anyway, 2 concept pitch is essentially not much of a pitching actually, but then it works in very, very rare scenarios. 1 minute pitch. We'll look at this. 1 minute pitch is not about telling. It is about showing. It is about explaining your concept. A 5 minute pitch or longer is essentially covering, you can look at it as a 2 sentence pitch, but then two mean, like I said, agriculture. I'm helping farmers, I'm helping the economy. Elaborate it, take a summary from your business plan, and then move on with your pitching. Clearly tell people that this is the market opportunity that you have found. There is a great need, there is a problem there. So people are willing to buy, and I'm going to take advantage of it. Review the key factors for building the business. Anyway, I think most of you have done this. Yeah. So you may feel that 5 minutes is too long, but then when you start presenting, I'm sure all of you realize that it's not really long at all. So what you mainly will mention, can mention in a 5 minute pitch is your value proposition. Why the demand is not being met. Why are you coming up with a product? You can come up with a Me Too product with a little change in features, that's okay. But then have you identified your unique differentiator from your competitors? That is your value proposition, the value, okay? So you have seen that there is a need that is currently not met by others, and you will fulfill that particular demand. You will mention about market and competition, why others have not taken advantage of the opportunity fully. Financial prospects, you will mention the income, the 3 statements. Risks, have you taken cognizance of the risks? Have you done the testing? So this also you will mention by probably saying, see, we have done a detailed study of it. As far as we have understood the current market scenario, I'm coming up with a solar based battery mobile charger, and I know where to put it in. I will put it in the price range of about 5,000 to 6,000 rupees, so that the Indian customers are not very price sensitive in that. But then having said that, it doesn't mean that others will not come into the market with their own solar chargers in the near future. But right now, this is what we've identified. By going through this aggressive marketing or advertising campaigns and by selling on the e-commerce sites, I'm sure we'll capture the market before the others come into the market. We may possibly have a first mover advantage. So this could be how you mention the risk and say how you have taken care of the risk. So do research. Where possible, just don't guess, talk to suppliers, potential customers, etc. And make sure all those you mention in the pitch. Extempore pitch, which covers the best possible knowledge about your business. Yes, correct. So there's not much mentioned about the elevator pitch. Elevator pitch is like a smaller version of a two sentence pitch. It is like you mention that your goal is to change the existing scenario of your country by helping the farmers and by making sure they are also not deprived, at the same time boosting the economy by providing more employment. I think this much you can cover during when you are in an elevator, right? So you have to hit the nail on its head, like they say. It's like you have to bring that person that you especially know that he could be a potential investor, make that person hear you, listen to you, be interested in what you're saying. So it's an art. That's why the whole thing is mentioned, the art of the pitch. So it's how many seconds does it take from in an elevator roughly to go from a first floor, let's say, to 20th floor by 2 stops?
May take 30-40 seconds.
Yeah, roughly 30 seconds or 20-25 seconds. So that's what is the intention as to how you make the art of the pitch possible in that particular short span of time. Clear? Yes.
Yes, Professor.
Clear, Professor.
Okay, great. One moment. Yeah, quickly the elevator pitch. So again, these are things that you have to consider as to what you need. So going through this, you will. So this is one thing that you have to understand very, very importantly. A pitch is not something in an elevator, it's fine. But generally, a pitch is not something which is a one-way street. That is, you are just talking, nothing of that sort. There should be some sort of interaction where you get the interest from the particular person whom you're talking to. That's very important. So depending on, I think we all know to a very large extent as to if somebody is interested in what you have started off talking about, and then they have you will have some sort of knowledge whether they are interested in it. If you find that there is an interest, then obviously you can start moving forward on the same pitch. Okay, it doesn't mention much about it there, so it's okay. Like I said, we will go through the executive summary and pitch deck. Okay. So don't get confused between an executive summary and the pitch deck. They are two different things. What's the difference? Executive summary is, of course, don't get too confused. When it is sent and all that, so this is again going very, very professional into it. But essentially, an executive summary is mainly to brief investors a certain level of knowledge. It has to be crisp and highlight key points. So it's a summary. Executive summary is a summary that covers all the key points that you have mentioned in the business plan, which is there in the following pages. It's mainly text-based. Clear? Again, executive summaries also can change. what is mentioned here is your decks are not necessarily, the pitch deck is not necessarily to get money. It is understand as much as you can. It is mainly to get the conversation going on, the interest put into the people who are listening to the pitch, and then it is a sort of a opening up for discussing further. But essentially, you are going to raise money. So it's not that you will not raise money, but the pitch is not saying that, okay, I have a beautiful business plan, please give me money. It is like, this is what I'm intending to do. Don't you think it is something great? That thought you should put in the investor's mind. When you do that, the money will naturally come to you. Yeah.
Can you repeat that again, Professor?
See, the pitch deck, when you see a business plan, you have making sure that the money has to be raised. Yeah. A pitch deck is not necessarily that, see, I'm trying to do this, so this is the investment I require. That is not the way you approach your pitching. You pitch so that you get the interest of the people who are listening to your pitch for future conversations. Is it clear? See, it's very, very known fact that the first time that your potential investor will listen to your pitch is not somebody who will come and say, okay, I'll give you the money for it. You are opening up an avenue. You're putting something into the mind of the customer, of the investor, saying that this is what something great I'm trying to achieve. And then opening it up for future conversations. Isn't it right? Yes or no?
Yes, sir. So, are you trying to imply that we should approach the investor in the point from the perspective of what is it meant for the investor as well?
Yeah, you must do it, but then that's not the first thing. You don't start with raising money. You start with getting the interest of the investor, and then you talk about money. You have to raise money, but don't go about raising money from the first instance itself. That's what.
Got it.
So again, to reiterate, this is where I'll almost finish. Again, to reiterate, please understand all your investors are by nature problem solvers. So you've identified a problem, there is a need, there is a pain point. So you have to actually convince your audience that they recognize that there is a gap and that I'm filling that gap with my solution. And my solution is going to aptly fill that particular gap. Clear? So the pitch deck talks about what it is, the problem or the solution, who has it, how big is it, how widespread is it, what's the cost waste associated with it. Okay. So basically you'll be talking about the value proposition in the pitch deck. So this is how the pitch deck will actually go on for a 5-minute plus pitch deck. You will mention about the value proposition, the target market that you've identified and the opportunity that you have seen, your solution to identify, to actually fulfill the particular need that is there. You will mention about the competition. Essentially, all these come up in the business plan as well. You will mention about the revenue model when it comes to that. How you are gaining traction, how is your roadmap being planned, your marketing, sales, and retention, and your team. Of course, financials, and how you'll use the finances. So essentially summarizing this is beautiful. I'll share the whole thing with you. This will be useful for you to understand not just about the pitch, a little more in depth about the business plan as well. So essentially, you must tell a story. This is where I'll stop right now. You must tell a story. In an elevator, you will tell a very small gist, not a story really. But from 1 minute onwards, essentially you will be conveying your business. I'm not saying you make a story of your business, but it will be conveying a story. It will be relating to how you are going to affect the particular individual who's an potential investor, and how you're going to affect the whole, wherever you want to start your business, how are you going to change it? What is the solution you're offering? How is it going to be better for people by you coming into the business with your business idea? Clear, sirs and madams. And very fast. Went very, very fast.
Yes, sir.
How many of you are comfortable if I share quite a few files on this chat window here? Or shall I put it up on the LMS?
It's
I think
better
it
LMS.
to put it up on
Yes,
LMS.
Professor.
Okay, great. So all these additional information I'll be putting up on the LMS. And yeah, we'll get back to this and keep it ready. So any doubts that could be addressed? Just wait for Professor to join. Any doubts that could be addressed?
Professor, I have a doubt. We spoke about the business plan and the various pitches. What would be the sequence of it usually in the practical scenario?
No, there's no sequence. Please don't get confused with the understanding of this. There's no sequence. It all depends on the time you have, on the people you meet. You understand?
Okay, got it.
So Sagar, see, if for example there is one student who has got a very good idea of collecting carbon from the atmosphere, so his pitches have been varying. For example, he went, I think, abroad to some international convention where they talk about pollution in the world and all that. So there he was given about a minute to explain his business plan. So he has to finish his pitch, borrowing everything from the business plan in that 1 minute. He has to put it out across so crisp and beautiful. Not saying in English, but what I'm saying is exactly how he is trying to help the world. There, in 1 minute. So that is a official podium that he got. Similarly, you will be possibly going and sitting in front of an investor, potential investor. So the same example of the same boy, he went to a particular place where their investors were one of the main owner of Paytm had come there.
Okay.
So he had about 8 to 10 minutes with the team there. It didn't work out. That's a different story. So that pitch will change. Whereas you casually meet somebody, you go to let's say a business building, mall, which entirely is about, let's say, World Trade Center, something like that. Then you know that most people are the business people, stuff like that. So you come to know that there is a person who's actually going in an elevator from one place to the other. I'm not saying elevator means necessarily an elevator. It could be this very small time that you have, that you just brush up and talk to somebody, brush up on somebody, and then talk to that particular person for just that particular small amount of time of 25 seconds. So pitch changes. So there's no, you just have to be ready with the different time pitches.
Got it, Professor. So always a shorter pitch will give a lead to a bigger opportunity.
That's how you can calculate it. And don't get confused like it's a shorter pitch. It's different timelines of meetings.
Got it, Professor.
Okay. You may get 15 minutes at the very first instance. Use it properly. Use it very effectively. But then that will be, you're putting your business up so beautifully well that particular team of people who are listening to you, the potential investors who are listening to you, have got so much interest in your particular business that they'll come back and be eagerly awaiting the next time you meet.
Sure, Professor. Thank you. I got it.
Professor, I have one question.
Yeah.
Apart from this business plan, what we presented to investors, does my background also influence in terms of?
Absolutely, the team. That's where in long back I mentioned. In fact, here also I forgot a good question you asked. The team is extremely important to mention. So in the team, your background and the others who are there in the business background is very important. If you're alone, your background is what is mainly considered by the investors. You have to mention it.
So what are key things they consider about our background, Professor?
See, if you're starting a business related to your business experience or your work experience so far, you can mention that.
Okay.
If you're starting a business which is not related to any experience you have so far, then then you must be able to convey your passion why you're starting the new business. Got it? It all depends.
Yeah.
But your background, the team's background is extremely important to be mentioned in the business plan.
Correct, sir. Yeah.
Any other doubts? All right, so coming back to the discussion of who's ready to present today, Ashwarya's team is ready. Second, whom should I mark? It's not that tomorrow so yeah.
Sir, our team, Abhinav.
Enough. Okay. Great. Next.
Hey, Professor Ashutosh, you can mark also after Abhinav.
Okay, great. Great to know so many already. Next. We have some time, so kindly request all of you who can present, because there's not going to be much of a change by presenting it today or tomorrow. Tomorrow definitely we'll do it. We're starting from the same time, ending at the same time. And subsequently you can put it up on the LMS as well.
Professor, is it mandatory that everybody in the team should be present?
No, it's okay. We can manage. We can manage, Kumar.
Okay.
Yeah.
If time permits, probably you can add the next name as our team.
Fine. Great. Okay, it appears that Professor Santosh has joined in correct time.
Hi everybody. Good morning.
Welcome,
good
Professor.
Afternoon. Yeah, welcome. I mean, thank you. Yeah. So I just want to steal a show from your regular professor on entrepreneurship.
Absolutely.
So this session will be teaching him what is financial statement and what is the financial aspect of entrepreneurship. So I think your professor is making a mention about what is that how you start your presentation or how you do the projection, and in the projection even the preparation of the financial statement becomes a part and parcel of your presentation, unless you give a kind of a monetary benefit to the investor or wherever who is kind of sponsoring your project. So I mean you cannot get whatever the required results actually. So presentation of the financial statement is very, very important actually. So as you all know that we have discussed with the financial statement already. So what are the important components of financial statement? Can anybody say? I think most of you are almost on the verge of writing your examination. So what is typical components of the financial statement?
Profit and loss account, balance sheet.
Balance sheet, profit and loss statement, cash flow statement.
Yes.
Sales forecast, then we have cash flow statements, income statements, balance sheet, break-even analysis, financial ratios.
No, actually, sorry, we don't give the financial ratios. Actually, financial ratios for internal purpose. Actually, whenever you're giving the financial statement will be for external parties, not for the internal management. So internal management, we prepare all this actually: fund flow statement, cash flow statement. We prepare ratio analysis. But however, whenever you are presenting your financials, the financial statement should consist your profit and loss account, that is income statement, and balance sheet. The balance sheet is also called as schedule of, statement of position of assets and liability. We call it as SCAL, statement of assets and liability, and we can also have statement of changes in equity capital. And of course we need to have the cash flow statement. That's very important. So we need to have the bucket. We have seen that various buckets in the cash flow. How each activities like investing activity, financing activity, and operating activity, it will have inflow or it will have impact on the cash flow of the firm. So that we have to project to the investors. So that's what your professor was mentioning about elevated pitch. Actually, elevated pitch. You have very short time actually. So within that short time, you have to make use of the best use of the time of the investors. So just show to the investor. So these are the financial analysis, or these are the financial kind of a benefit what your project is having. So to understand that, so we have to prepare the financial statement, which consists of all this which we mentioned. So typically, whenever anybody asks what are the components of the financial statement, please mention about your balance sheet, your profit and loss account, and your schedule of changes in equity, and your cash flow statement, and notes to accounts. That also I mentioned one of the session. Notes to account is also one of the important parts of the financial statement. So see, typically you don't have any pro forma, in the sense if you are starting the business, you don't have any pro forma. That means you don't have any previous year, or you don't have stock, you don't have any any asset or any sales assets. So what we have to do? So we have to do the marketing. You're seeing that I mean, we have to do the marketing aspect. Then with that, we should understand what could be the projected sales. Okay, we cannot give whatever sales we want. So everything will be asked by the investors. So if you just give for the sake of giving, or to window to do the window dressing, if you give more sales, then hypothetical sales, it will not work out. So you have to do a proper due diligence. See, this is a link between various aspects. Actually, you have operationally, you have to see you have to see how your project will move on. Marketing, from the marketing perspective, what is the project? Then everything from the production point of view, how much you can produce, what could be the capacity. So based on that, you have to have a realistic information. So this is kind of whatever information you gather from other sector, like production department, marketing department, and sales department. So you have to project in the numbers actually. So that numbers we projected in our financial statement. Okay. So this pro forma which we discussed actually. So we have to have a revenue, the projected. We have to have a cost and expenses actually. What is the revenue item, income item? It is nothing but your revenue minus your gross profit and net profit. Just go to this the previous one. Next. Yeah. So this is the projected actually. So so this is the projected one. So we have year one we have 970, and this is the present you have 100. You have taken that 100 as you all know that now we have to prepare the common size statement actually. So what they have done, they have taken the common size statement, that is if you see the percentage, it is sales they have taken as a common size actually. With that sales they're comparing everything. So typically we'll go to the year one, year two, year three. So year one is a starting year, so we are expecting less sales actually. We are expecting very quite a conservative approach. We have 970 units. So year two will have 1264 sales turnover. Then year three will have 1596. So this is the turnover, or this is the turnover we are projecting actually. So for this, there should be a solid base, that we should have a solid base from the marketing team and sales team, that this should be the sales forecast. Then with that, what we do, we minus your cost of goods sold. Cost of goods sold, that number you get it from the production team. So they say that this is typically for I mean, what is the raw material, what is labor you're paying, and what is the direct expenses like factory rent, other things. You get it directly from the production team. What could be the cost of goods sold per unit? So with that, you have to multiply number of units, and you get 485 and 632 and 739, and you get cost sales minus cost of goods sold will be your margin, that is gross profit. So with that, what we do, we have to minus your operating expenses. So operating expenses are nothing but it is not directly involved for the production. It is kind of aiding the production. Like example, salaries for the kind of accounting people, rent of office building, utilities, advertisement, sales, etc., etc., etc. So what we do with the gross profit, you have to reduce your expenses. Then you get the net profit. So I mean, you also have the depreciation. If you see here, you also have the depreciation. The depreciation is calculated based on the fixed asset. So you have various methods of depreciation, straight line method and WDV method, return on value method. Based on that, you have to calculate. Normally, in our corporate finance, we have the percentage. They give the percentage, or if they don't give the percentage, what we have to do, you have the investment. That investment should be divided by number of years actually. Then you get depreciation per year. So we have to add actually. So this is what I'm telling again and again. Only the financial statement or only the accounting perspective, we have we consider depreciation as an expense. But if you see other statement, depreciation is not at all, it is a non-cash item actually. There's no involvement of cash actually. So this is just a notional, kind of an expense. So because of that, you have seen that ARR, IRR, and we have various methods. Only your ARR method, accounting rate of return method, will have the depreciation. But other methods, it has to be excluding your depreciation. Because, it has to be, your depreciation should be added back to the profit actually, because depreciation is not an expense for you. So you have to add back the profit to your earnings. Then you have to calculate, IRR, payback period, etc., etc., etc. Then can you scroll down, Professor? Okay, so this is typically what they have already given the common size statement. In the previous slide we saw the sales they have taken as 100%, and they're comparing the sales to various items actually. Just scroll up, sir. Scroll up. Sorry. Yeah, if you think sales is 100%, so example typically they are saying your cost of goods sold will be 50% actually in all the year, first year, second year, third year. If you see the percentage, it's all 50%. And sales minus your cost of goods sold, and you're getting at least 50% of gross profit. Out of it, if you minus your total expenses, you get net profit actually. You scroll down. Yeah, so the net profit, for the first year, it is minus 151.3. The second year it is 16.3. The third year it is 127.9. So why you think we are getting a first year negative? Because this is the first year actually. So the sales is down, and also we have huge expenditure. Because if you see that office expenses is not directly proportional to your sales. Whether you sell the goods or not, you have to provide depreciation. Whether you sell the goods or not, you have to pay salary to the employees. I'm not talking about the labor. I'm talking to the accounting employees, IT, other things. You have to pay the rent of the building. Everything should be paid actually. So because of which the first year looks like that you have to you get a net loss actually, that is 151.3. The second year it is good, you're getting 16.3. The third year it is, see, this is what you can explain actually. This is not I prepared that. This is what you have to gather and present to your investor actually. So the third year you're expecting 127.9 actually. So the driving factor for this, see, it's all it's an accounting thing actually. You have that you have gross profit. From the gross profit you reduce all the expenses. From that expenses you get the gross profit minus expenses will be your net profit. So the net profit, whatever you risk, whatever you arrive at the net profit, so that is what it is already there actually. So what is that best judgment inputs whatever you're getting. For example, that sales, the sales that what is that forecast sales, that plays a very vital role actually. So that anybody actually, whenever you go for the project proposal, definitely they'll ask you how did you arrive at this. See, they're not interested in your expenses. First thing they'll ask you how did you arrive at the sale actually, because typically we say that sales for the first year is less, 970 something. The second year you say something, and the final you say sale is gone up to drastically is increased actually. They'll ask you how do you project actually this particular sale. So then you have to get the input whatever the sales department or the sales analysis is given. So you have to project that because of this, and this is what your project, and this is what you have to project to the management. So just go down. And typically we have also seen that what is cash flow. Cash flow is nothing but it gives the cash whatever it is incurred in the business, whatever the movement of the cash in the business, and whatever the cash we bucket in three activity. That is operational activity. The operational activity is nothing but your there are two methods of depreciation. One is direct method and indirect method. So we typically, accounting standard takes both direct method and indirect method, but indirect method is very easy to follow. Actually, that's what we have worked out one of the assignments. So indirect method is easy. What we typically start with, we start with the profit actually. Then with the profit, we have to do all the adjustment, non-cash items. We have to do the adjustment like depreciation, other things. Then we have to have typical working capital, changes in working capital. Then we have done that plus increase in cash, increase in current assets, decrease in current assets. So that we have to add and subtract. Then you get the number. The number will be your cash inflow or outflow from operating activity. The next bucket will be cash from investing activity. Cash from investing activity. Typically, this will be perform part of your fixed asset. Actually, whenever you purchase a fixed asset, you sell a fixed asset, then that will be the inflow and outflow. That activity should be recorded in investing activity. And we have the next activity is finance activity. The finance activity deals with your liability side of your balance sheet. That is, what is the share capital? Is there any increase in the share capital, or any decrease in the share capital, or any additional borrowal from the bank, or repayment of loan, and any interest paid to the shareholders, any interest paid to the debenture holders, and any interest dividend paid to the shareholders. Everything will be documented, or everything will be disclosed in this activity. So typically, if a person sees, anybody sees this particular cash flow statement, you should get a feeling that okay, if I do this business, for the first year, this will be my cash inflow or outflow from the operating activity. Normally, operating activity will be less actually during the first year, and the second year, if you see that, everything will be negative in the first year, because because you have lots of purchases actually, because you will not have any sale or something. A lot of purchase will be there. If you see investing activity, a lot of you would have bought so much of fixed assets actually. So there will be outflow of fixed asset. So this is typical. He'll understand, okay, if I invest 1 rupee today, and what is that money is kind of allocated actually. So investing activity is investing activity, that is buying of fixed assets, he's investing so much. And okay, for finance activity, how much he's getting the money, what is the outflow. So all this typically will be described or discussed or disclosed in the cash flow statement. So whenever you go for a loan also to the bank, so typically they want to see all this actually. Typically first they'll ask you for the ratios, and first they'll ask you for the audited balance sheet. From that audited balance sheet, they'll compute their own ratios. They'll compute that whether you have the current ratio, whether you are able to pay your current obligation, that is current liabilities, current assets is more than current liability. All this will be analyzed actually. So in typical bank, so whenever as a investor, if somebody comes to you with a proposal actually, you have to understand that if you are investing in a company, it's a big money. So we have to understand the viability of the particular project. So viability of the particular project. So this is typically the finance will be depicting all the results of all the other sectors actually, like your sales sector, like your operation, like your marketing, all this whatever the results, it will be depicting here in the form of numbers actually. So this should be present to the investors. Can you come down? So as I mentioned, cash flow will be of two types, that is direct method and indirect method. So typically what they are using here, it is net income, that is net profit. So what they do, they adjust non-operating, that is non-cash operating item, they adjust. It could be expense, it could be income. So typically example, non-cash item example is depreciation. So what we do, we have to add back depreciation. If we start with the income profit, we need to add depreciation amount, because depreciation is not a part of your cash outflow or inflow. So it is just a notional amount. Then what we do, we have to see the current assets and current liability. So we know what is current assets. So current assets are those assets like your inventory, your debtors, your bills receivable, and other current assets. And the current liability will be typically bank overdraft, and you have bills payable, and you have other creditors. So all this will be, you have to understand increase or decrease in the accounts receivable. So this is what we have to account. So this, whatever the sum you get, the profit plus adjustment to the net income plus whatever the changes in the working capital. So this typically gives you the operating results, operating whatever the cash from cash inflow or outflow from the operating activity. So this is what typically they want to know actually. If I invest my money, how the money is utilized, how the profit, that is what everybody wants to know. Yeah, can you just scroll down? So this is typically I mentioned about yeah, this is okay. Just scroll down. This is what I have discussed. Okay, so this is typically the cash flow by month actually. So they are given for the month of January, February, March. Every month you are given. So first they are given sales is at 12, 27, 41, 61, 82. They are increasing, keep on increasing. And you can also kind of as a finance manager, this is given by the team actually. So your sales team, but typically you have to kind of patient this actually. If you see one of the month actually, April, one of the month, that is September month, September, October, it is typically very low actually. So we need to see why the sales are low and why the sales are kind of it started from January. January it is you are starting the business, it is going up. So suddenly there is a dip in September, October. Then we need to challenge, or we need to ask why these 2 months why it is very less. So it also depends on the industry. As I mentioned that, if it is suppose if it is a seasonal industry, so that particular season, that is September, October, you may not have the sales. So that could be the reason actually. So you should be prepared like that. You will have so many items in this. So they'll ask you actually. And if you see the salary of every the salary, it is given 26.2. That's throughout the year we have the same labor force. And rent also you have the same actually. It is 222. And utility you have 8 and 9. That is fine. So advertising you have first year January you have 13.5. And so in the month of September it is 21. Sorry, in the month of September it is October it is 21, but still you don't have any results actually. If you see October month you are spending so much, but still your sales is only low actually. So we need to investigate why this is happening. As a investor, we need to ask all these questions. Okay, then we can go to the next one. Yeah, so this is monthly cash inflows, and we have discussed that how do you get money actually. So this is what you are the kind of entrepreneur, but you need money. So you need money from various various sources actually. Typically, you can go down actually. Professor, you can Okay, this is typically they are showing the balance sheet. So the balance sheet you have cash, current assets, and you have non-current assets. The current assets consist of cash, account receivable, inventory. Non-current assets will have your fixed assets, equipment, and equipment will be shown at a WDV, written down value, that is cost minus depreciation. And in the liability side you have liability of the owner's capital, then you have accounts payable, and you have blah blah blah. So this is typical. So it is okay because most of the accounting standards actually it gives that liberty for a presenter to change that format. It can be like this, or it can be typically what happens in the we have seen actually whatever it is, the share capital will come in the first line item of the balance sheet, but here they are given last actually. That is also accepted from some of the accounting standards. It is accepted actually, not with I'm not talking about IFRS or US GAAP. Some of the local generally accepted accounting policies, they may permit that one. So typically, we're not challenging that the presentation here, but we are challenging only the numbers here. We don't have to challenge this number because we are not doing the audit of disclosure audit. We are just checking the numbers actually. If you could come down. Yeah. So this is the next question. What as an investor they'll ask you, what is the break-even point? So we all typically seen what is the break-even point. So what is the break-even point? What is operating break-even point?
Total fixed cost divided by
no, not formula. That formula is I know, sir. You've gone to the formula. That's good. But what do you mean by break-even point?
The point where I get back my return is equal to my cost.
Exactly same actually. See, yeah. Yes, sir. Somebody wants to try?
Yeah, the point where I'm actually neither negative nor positive. I'm actually getting into the transition from the investment side into the profits, the interim point between this transition.
Yes. Okay. That's a typically, it's a typical theory of, break-even point. They say this is a point of unit at which you don't get any, you're not incurring any loss or you're not getting any profit. So this is what, your profit will be zero at this point of time. So now typically I'll tell you that, whenever you have an industry or whenever you have a startup, you will have, two types of, expenses actually. Okay. So when I say that, whenever, yeah. So when I say that now, whether you're getting a profit or loss, first thing you have to have two kind of expenses. In any firm, there will be two kinds of expenses. One is fixed expenses, one is variable expenses. So what is fixed expenses? Fixed expenses are those expenses which will not change actually. It is not attributable to the production. So whether you do the production or you don't do the production, you stop the production, but you have to pay that such expenses apart from interest. So what are the such kind of fixed expenses? Example, you have to pay the salary to the employee. You have to pay the building rent. So all this, you have to pay the storage warehouse rent. You have to pay. Whether you incur, you sell the product or you produce the product, you have to pay that. So what happens? That we have to cover first. That whatever the fixed expense is there, that fixed expense you have to cover that. Then later on, the variable expenses should be met. Whatever you're selling that, see whatever. Let's say that 8,000 unit. If I say 8,000 units is a break-even point, that means that 8,000 unit should be able to generate fixed income, whatever the fixed expense is there. No, let's say fixed expense is 7,000 for the organization. Okay, the 7,000, that whatever 8,000 rupees you are selling at 1 rupee, so that first should cover your fixed expense, whatever it is, 7,000 you should cover. Then later on, that 1,000, whatever you have, so that will be your variable capital. So to produce 1 unit, you have to incur 1 rupee, something like that. So first you have to cover fixed cost, and next it has to cover your variable cost. So variable cost is very simple actually, because as the number of units you produce, you will be incurring 1 rupee. I mean, for every unit you have to incur some money actually. It is depending on the production. If the production is high, your variable cost is high. Your production is low, the variable cost is low. So it is all depending on that per unit actually. So what we do typically, we take the total fixed cost. Total fixed cost, whatever you have the fixed cost, you take the fixed cost divided by what we do. I take contribution per unit. So what is contribution per unit? Sales sales minus your variable cost, you get the contribution. So contribution per unit should be divided by total fixed cost. Then you get variable cost. So that means variable cost. I mean that will be your break-even point. So that is the point at which that is the unit you have to sell to survive. I mean, let's say that break-even point is 8,000. If you sell at least 7,999, you will be incurring a loss. If you sell 8,001 unit, you'll be incurring 1 unit profit. So this is what typically you have to convince your stakeholders. So, or your then see this it has got its own limitation. How do you determine the fixed cost? That is variable. See, classification of the cost sometimes becomes difficult, whether it's a fixed cost or a variable cost. So this is a challenge, but otherwise this is a very good technique. Still people are using this in modern financial management. People are using this break-even point to see that whether they are incurring a loss or they are incurring a profit. So this we have discussed actually. So I don't want to put you in this formula. This is totally you have that same thing. Whatever we discussed, keep in mind total fixed cost divided by contribution per unit. Contribution is nothing but your sales minus your variable cost. So that will be your contribution that we have explained. So this is a point. So you if you see your fixed cost, the fixed cost is straight actually. It is 600. It is throughout actually. If you sell 100 also it is 600. If you sell 300 also it is 600. It is if you sell 500 also it is 600. It is constant. Then if you see your variable cost, the variable cost is starting from 0 actually. The second line wherever you have that so that is a fixed cost actually. So the fixed cost will vary with your production actually. If it is a 0 production, it is 0 fixed cost. If it is 100, you have some number 200. If it's 200, something number is there. So the fixed cost is there actually. Then whatever the total cost and the fixed cost is meeting, that will be the break-even point. So that is in this example, I mean this is a pictorial representation. In this example, it is somewhere close to 300 will be your breaking point. Okay, so this is typically how we have to, I mean, the pictorial presentation, whatever you have, calculated, you put in the graph, then this will become your break-even point graph. Yeah. And for this, typically what we have many softwares. We can use it. Just yeah. Scroll up, sir. Yeah. So here, here the next question is first of all, when you have the idea or when you have this when you want to do other just scroll down actually. Yeah, scroll down. You have that next slide. Yeah, stop. Yeah, so we have seen that what are the sources of finance actually. So the no next I think we skipped that one. Just go up. Yeah, stop. Yeah. So this is typically we have two kinds of funds actually. One is internal funds and one is external funds. So what is external fund? If it is if it is existing firm, you can have internal fund. If it is not existing firm, you may have to depend on the external funds. So what is internal fund? So internal fund is nothing but we have we have seen in our typical example, we have seen retained earnings. So retained earnings is that is a savings which is accumulated over the period of time that can be used for funding other new projects. Then you have profits actually. Then that is also we have discussed, and sale of assets actually. Whenever there is a sale of asset, whenever you have the profit, that profit can be utilized for funding any new project. Then other thing, you can typically reduce your working capital. So you can reduce your working capital. That means your working capital should be always be positive actually. Working capital is nothing but your current assets minus current liability. Okay, and this whenever we have this, we need to have the positive working capital. Okay, so then if you have more and more working capital, more positive working capital, then we can have more of internal fund actually. Then typically account receivable also is one of the source of fund. So what we do, we kind of realize, or we have seen that whenever you have account receivable, you go and realize the money from the particular debtors, then from which you can fund the new project. Then there is short term and long term actually. Then typically what happens, you have long term capital, like you have to have equity source of capital, and equity source of capital is nothing but they are all owners of the company. You issue the equity share capital, they become the owner, and they participate in the profit of the firm actually. The profit is not mandatory. Then if you go for preferential preferential shares have got the preference over payment of dividend and repayment of capital. What happens, this typically preference shares will have the, we have seen that in our example, we say 12% preference share. So that means every year you have to pay 12% dividend for them, irrespective of whether the company earns profit or not. We have to pay the dividend, and they will also have kind of a priority whenever the company is going for the liquidation. First, for the equity share, you may get or you may not get the money. Whatever, in case of companies liquidated, the company, you may or may not get the money. In the second case, preference shares, what happens? Typically, when the company is going for the winding up, you get the priority over equity shares. So whatever, first, it will be, debtors actually, because debentures, debenture holders will have a charge on fixed asset. Actually, whenever you want to sell the fixed asset, whatever the fixed asset is sold, that has to be given to the debenture holders, because sometimes they'll create a charge on the fixed asset. Then all the other expenses will be met. Then lastly, it will be preference shares. After preference shares, if any money is left over, then it will be given to the equity shareholders. So this is typically equity shares and preferential preferential. Then equity share preference share will also be given some kind of a option after 3 years or something. You can convert this preference shares to equity shares. So that is one of the forms of finance. And typically, and the next one is debenture. So debenture is nothing but it's a borrowal of loan actually. When you go to the market and you buy you borrow the money and issue units to the debenture holders. So typically debenture holder will be having kind of coupon rate. So they say 12% debenture, 10% debenture. That means you have to pay the interest every year, irrespective of whether the company is earning the profit or not. It has to be given. So the good thing about debenture, they'll be having a charge on the fixed asset. So it's like just like that, they'll not give the money. The investor, debenture holders, what they say, whenever I'm giving the money to you, you have to create a charge on the fixed asset. That means some kind of a collateral or some kind of a I can say that guarantee. That means I have to create charge on the asset. So whenever the company is defaulting the payment, what they do, they realize the asset. They sell the asset, then realize the money. So that is a typically the arrangement they have actually. So these are the typical forms of fund which you can raise from the market. Then that there will be primary market and secondary market. Primary market is for the initial issue of shares, and secondary market for the further issue of shares. If you want to go for IPO, so the IPO will happen in the primary market, and the subsequent issue will happen in the secondary market. Okay. So can you just scroll down, sir?
Professor, I think the others must have been covered by others, other faculty who may have, sources of funds. So the main thing is, I should be very thankful to you that you explained to the students about the financial statements. So any last word on how they can prepare the 3 financial statements, please?
See, on this 3 financial statement, take typical example of if you are doing a presentation to investors. Take the typical example. Take the realistic actually. Don't take high numbers of the sales. So you can use the sales actually. You just go to the balance sheet, and you can also see let's say that you are you are the company, and you are asking for the investors to invest in your company. So what happens typically? Let's say you get money from the investors. Let's say you get 1,000 rupees from investors, or $1,000 you get it from the investors. So that will be the share capital. If you go to the share capital, so that will be the $1,000. So from the dollars, what we have to do, typically we have to purchase some assets actually. Let's say the purchase of assets will be around it. In the initial year, the purchase of assets will be very high actually. Maybe you may have to, out of 1,000, you may have to buy at least 600 to 700 rupees. You have to buy on the asset actually. Then typically you will have 300 or something that will be in your cash or bank balance. So in the first year, the balance sheet looks very simple actually. So you'll be having only the sources of wherever you have received the money, and you will be having that, how you are deployed the money. So in the typical first year, the second year, you'll have, other things like, debtors will be there and other current assets, and, you'll have, current liability, blah, 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 will start from the second year actually. In the first year, the balance sheet should be, very, very, simple actually. So whatever money you get it from the investor, then how the money is deployed in terms of, various, allocation of funds should be there actually. So we call it as application of fund should be, in the first year. The second year, you will have, sales, you'll have typical, expenses, other things. Then you may have, current assets, you will have current liability, inventory also you should have. So all this will be there in the second year actually. So first year, buy the asset and keep it in a liability. Keep it in an asset and liability. Second year, you have to create, provision for depreciation and other things you can do that actually. Okay. And if you go down, yeah. And, typically you can we have seen that how you prepare the cash flow statement. So cash flow statement is very simple. If I want to prepare the cash flow statement for the first year, what will happen? It is only simple actually. Whatever money you receive from the investor, that will be there in the finance activity, and you don't have any profit for the first year. So profit will be zero, and you will not have changes in the working capital. Everything will be 0, 0, 0. And the second investing activity, you will have something actually. You will have various investing activity. You would have bought some property, plant and equipment. You would have bought some office building. So all this will be in your investing activity. So then your cash will your cash outflow will be your cash at the end. Whatever investing, whatever the cash after this activity. So along with that, if you club your opening balance, that gives you the closing balance. But here in typically you will not have any opening balance. Opening balance will be 0. Then subsequently, what you can do, you can have changes in working capital will be arising, and you'll also have various other additional source of finance will be there. So all this will be typically, and you will also start with the profit actually, because for the first year you may not have the profit. In the second year you may get the profit. You can start with the profit, and you can add your depreciation, whatever depreciation you have in the P&L account, you can add the depreciation. Then what you can do, you can typically go to the changes in working capital, that is current assets and current liability. You can increase or decrease current account receivable, increase or decrease inventory, increase or decrease prepaid. You can just document that. Okay, so this will be the typically how you have to prepare your cash flow statement. Okay, so any questions, guys, in this? And when you prepare this, you can also present actually. You can also present in a common size statement. So common size statement, what they have done in the slide, they have taken 100% as 970 as 100%. Then they're comparing this 478 divided by 970, and that's what they've compared. If you go to the salaries, 308 divided by 970, you are getting 31.8% and 2.5%. Whenever you're presenting to somebody, then you have to typically need to know actually why the salary is very high in the first year and why the salary has gone down actually. Maybe because it could be overestimation of number of headcounts. Maybe because of that you may have more salary. So typically you have to prepare your you have to show your common size statement actually. So take the sales as your starting point. Sales should be 100. Then you have to compute actually. Example, if you have advertising expenses 192, that 192 should be divided by 970. Same thing, you have to divide that. All the numbers should be divided by sales. Then you get that number actually, that percentage. So that percentage should be very helpful for you to understand whether increase or decrease in the first year, second year, not in terms of numbers actually. So this is typically how we prepare forecast. I'm not talking about income statement. We are preparing the forecast for the investors actually. This is typically we don't prepare actually. This is year 1, year 2, year 3. We will not present in your in the financial statement. But this is only for the internal purpose. Whenever you are going for the loan or whenever you are going for the approaching for the investment proposal, this can be adopted actually to give better picture of the numbers.
So, Professor, thank you so much. On behalf of the class, I would like to thank you for taking the time and interest to come and explain this to the students.
Yeah, thanks a lot, guys. Enjoy, and all the best for your examination. Yeah.
Thank you. Bye-bye.
Thank you, Professor.
Thank you. Thank you.
Thank you, Professor.
Yeah, students, what we'll do is we'll just take a 5-6 minute quick break. From 3:10ish, we'll start with the presentations. We'll keep a ballpark of about 15 minutes per presentation, and we will start from there with whoever is lined up for presenting from now. So we'll just take a quick break and come back in about 6 minutes, please. Thank you.
Sure, Professor.
Sure, Professor.
So I'm back. I request all students to please stay back for the presentations because it's very important for you to know and also learn from that. So if since all of us are here, shall we start with Aishwarya's team's presentation?
Yes, sir. Yes. I'm just waiting.
Yeah, we'll wait, no problem. The 2 minutes we have.
I Hi, Professor. We are ready to start.
Yeah, please start. Do you want me to give you the co-host, or you can carry on as it is?
You can give it to Manish. Yeah. Uh, Manish, are you there?
Yes, yes.
Yes, sir.
Yeah, Manish, carry on, please.
Yes, Professor.
Ready, Professor. Hi all. Good afternoon. So I just want a minute for you from you people to explain my business idea. I would call ourselves the sugar fighters. Diabetics is a very common problem in urban community, and we would like to make it easy on them. In Bengaluru, average blood sugar level is of citizens is 8.37%, while recommended level is 7%. We all know that what it takes to resist a sweet, juicy cake with some cream and cherry on top. So we want to set up a sugar-free bakery to create cater exclusively for the sweet tooth of diabetics and fitness community out there. We would like to start with an outlet in Bengaluru and expand into cloud kitchen. Our product should range from sugar-free chocolates, muffins, cakes to oil-free chats. Imagine a bakery that is set up, designed, and perfected only for you. So we call it Sweet Tooth. We would like to charge the consumer slightly more than the usual bakery with extraordinary value to their eyes, tongue, and blood. It's all sugar free and guilt free. We expect a break even within 3 years with an investment of 10 lakh to begin with. We are a team of crazy, innovative people. We have on our board food scientist, an accountant, an engineer, and a technology freak. So that is all about it. My friend Aishwarya will take over.
Good afternoon, everyone. My name is Aishwarya KS. So, before we start off with the business plan, I would like to tell you about why we have chosen Sweet Tooth as our startup. So, we all know that starting from the teenagers, or in that case, even from newborn babies to the older ones, many of them are getting diagnosed from diabetes. So, there is a myth that one gets diagnosed from diabetes or becomes a diabetic patient because of consuming a lot of sugar, even though there are other reasons such as stress, genes, etc. But once diagnosed from it, their whole diet has to be changed, where there is nothing like sugar in their diet. But yeah, most of them are bound to have cravings for sweets and chocolates. So we are coming up with this sugar-free confectionaries that can be relished by the diabetics guilt-free, and also for all the fitness freak out there who don't want sugar in their diet. So moving on to our business slide. So we are getting a unique sugar-free confectionery store in the market that brings the bakery foods and sweets all under one space. And we are planning to start with our sweet tooth production and sales by January 2021 with one location in Bangalore. So that is an introduction about Sweet Tooth. My next team member will brief about our company.
Yes, as explained, we are only planning to start the business only in limited locations, which will be Bangalore. And going forward, our growth policy is to set up a cloud kitchen wherein we can enjoy the benefits of this economies to scale, where all the production activities are being performed in one single location and deliveries to take place from that single location. So we thought of having this plan so that we can have the production centralized and deliveries to take place in all the South Karnataka. So, for example, we as going forward, the cloud kitchen will be set up in Bangalore and the deliveries will be transported to the whole of South Karnataka. So our aim is basically make the Sweet Tooth the landmark brand of Bengaluru. So coming into the vision and mission. So our vision is to provide a sugar-free lifestyle to everyone. So our target market will be the whole of
the population, and our mission to fulfill this will be the confectionery cravings to make guilt-free to all the people. And coming into the objective, so yes, we are planning to make the growth in first 5 years for each year having double to triple digit growth. And yes, we are also having the plan of retaining all customers and growing the customer base and having the customer turnaround as high as two times every 2 years. So, and yes, the profit margin should be adequate, and every quarterly we are assessing our profits and planning our investments and sales accordingly. And we also maintain a fixed percentage of 20% of the profits to significantly into the research and development. As you know, sugar free doesn't mean complete sugar free, and yes, through this research and development, we are planning to have the complete sugar free in our products.
Good afternoon. Akshay is here. Yeah. So the problem today we look is the lot of people are suffering from diabetes, and the if you look at the numbers from 2012, the patients were 63 million, and the number it got increased to 75 million in 2019. So we see clearly there is increase in diabetic patients number, and also eating lot of sugar in early life put children and young adults at risk of heart disease and other health issues like obesity and high blood pressure. So to address this problem, we have come up with the products having no sugar, and we are just replacing the sugar, not the sweetness. So you can have variety of products, and you can be healthy without making any drastic compromises. Can we move to next slide? Yeah. So the market potential, coming to market potential, if you look at the period between 1990 to 2013, the growth rate of the diabetics was 128%. That is, the number of patient got more than doubled. So the estimation from the 2015 to 2015 also, that the number will get doubled. So most prominent factor here is, which is going to increase the demand, is the prevalence of diabetes in not just in India but across the world. Also in these bakery products have become essential parts of the urban dietary choices, and the rising concerns towards the health and fitness will definitely going to make people to consume more healthy bakery products and confectionery products. Coming to the unique value proposition, this business itself is a unique business, because there are no such players focusing on this kind of idea. And also we are using this sucralose and stevia, which is replacing the sugar, and it is safe for everyone. My friend Aishwarya will take over from this.
Yeah. Hi everyone, I'm Aishwarya Hugh. I'm here to present the 8-minute pitch. Let me tell you who we are. We are a team of 5 who are passionately working on improving the human condition and specifically focusing on the betterment of the individual health. And let me also tell you why we exist. We have come across a lot of people who are suffering from diabetes, and surprisingly, the numbers are very more when it comes to the younger generation. Eating lots of added sugar early in life is linked to obesity. It is leading to high blood pressure and type 2 diabetes. And these health issues put children and young adults at risk for heart diseases. And also we know how hard it is to stop the kids and the younger generation to avoid consuming more sugary products. Yes, this is a serious concern. And here we are to address this issue. And also, so we have bought this product, our company called Sweet Tooth. I'm happy to say that we are forming as a company through which we get a satisfaction of serving the world in some way which is beneficial to the people out there. So we exist for all those people out there who crave to have the sugary products guilt-freely. So that's our main aim. When it comes to the solution providing to this problem, our products are sugar substitutes that aim to replace the sugar but not the taste. So what I would like to say is we use stevia, which is a plant extract, and also the fruit extracts, which are very good for health, and it doesn't cause any harm even if it is consumed in more quantities. So since we use these products in all our confectionery products that we are providing, there won't be any harm to the kids, adults, or old age. And most importantly, the taste is not compromised in any matter. And I would also like to say why this is a good opportunity to start this business. Since we live in the urban area, we very well know that how people are attracted towards the confectionery items and the products. So if we are getting these products to them, which are sugar free and which is really good for the health in a long run, this will serve as a boon to them, and the consumers of our product itself will become our promotional media. So so coming to the marketing mix with the 4 Ps, the product is all varieties of confectionery items we will be providing. It is sugar free mainly, and the price perspective, it is moderate, a slightly higher than when it is compared to the other bakeries, as we are aiming towards good health of the consumers. When it comes to place, we will be initially located in Bengaluru, and later in the near future we would like to expand our business to the other cities as well. Coming to the promotion, as I said, our consumers should be our word of mouth. That is what we are aiming to, and the social network as well as the health campings. Can we move to the next slide? Yeah. So why our product? As I already said that sugar, when it is consumed in more quantity, it is really addictive and it causes a lot of health diseases, and that's really bad. And this serves as a major concern why we exist here. So it also can cause cancer, it can cause the heart diseases, high blood pressure, and that's really devastating to hear that a lot of young generations are also getting this kind of diseases, and which is really bad for the long run of their health. So our target market is the teenager, adults, diabetic patients, sports personnel, and late 50s. So in general, we target everyone, and the main reason is, since we are providing the confectionery items which are sugar free and it is really good for the health, even if it is consumed in more quantities, so it won't harm anybody, even if it is a kid or a old age people. So, and nowadays we also see that a lot of people are getting into fitness. So the fitness community can also be our target market. Coming to the SWOT analysis of our business, the strength is the standard product quality which we are providing, the hygiene, from the place where we get the product, the way we bake it, and the way we deliver it. Everything will be monitored very closely, and we are going to promise a good product quality with a hygiene in it. And pricing, when it comes to pricing, it is, as I said, it is a moderate pricing which we are going to keep, so that it will be achievable, or it can be affordable by all the types of people. When it comes to weakness, lack of expert workers, capital limit, lack of goodwill. So these are the weakness which we have considered for our business. When it comes to opportunity, free entry to the global market. As I said, since we are the only company which are completely dedicated to work on the sugar-free product, I think till now there are no other brands or companies which are dedicatedly working for this cause. So I think we have a first mover advantage in it, which is a strength to the business, as well as it can be an opportunity to the business to flourish further. When it comes to threats, competition, the new entrants, and the resource constraints will be there. So if these threats are taken care, I think it can be a strength to the business. When it comes to the capital requirement, the investment and all, we are planning to invest 10 lakh rupees, out of which 3 lakh rupees should be invested to the rental deposits and the other deposits. And for kitchen equipment, we are planning to invest 2.5 lakh. For 1.5 lakh for the interior decorations, 80,000 for the furniture, 2 lakh for the working capital. And the remaining financial goals will be explained by Manish or Sagar. You can pitch in. Thank you, sir.
Yeah, thank you, Aishwarya. So we are forecasting an investment of around 10 lakh in the initial year. Maybe 2020 we would invest around 2 lakh to set up the business and to take all the government nods and all things. And by 2021 January we would start our sales, and we prudently think that our cash flow would be equal to our cash outflow, and we don't expect any profits on the first year, and the second year we would feel that there is a little more cash flow of around 2 lakh or more net cash flow in the second year, and in the third year we are going to break even with our investment, and in fourth and fifth year consecutively we may come up with a net cash outflow of around 16 to 17 lakhs. So this is our target with cash flows, and over to the professor, and welcome any questions.
Yeah, I think the idea is excellent. So the survey that you've done is excellent, and generally with the paucity or scarcity of the classes and sessions, the work is done very well. Can you just go to the very first slide of the elevator pitch, please? Yeah, this can you explain again? Whoever explained.
Yes, Professor. So we started with explaining that in Bangalore we have around 8.37% of citizens. Sorry, in Bangalore the blood sugar level is around 8.37%, compared to 7%, which is regularly recommended by doctors. So that is a bit high in Bangalore for the citizens in Bangalore. So we all know that it is very much difficult to resist the sweety, juicy honey cake that with the cream and cherry on top. So we want to set up a sugar-free bakery to cater exclusively for the sweet tooth of diabetics and fitness community out there.
Yeah. So that's good. That's good. Just make it shorter and make sure that you bring out that shock in the people, in anybody who's listening to it immediately, and then offer the solution.
Correct.
Yeah, just change it a bit, and the only thing when you upload is as per what you decided, maybe not as per as what you presented, as per what you decided. Just make sure you don't mark everything as an 8-minute pitch. You make a business plan that you put up separately under two of you who may have presented the business plan, and then the pitches as different. Elevator pitch as one person who would put it, 1-minute pitches who would put it, and then 5-minute pitches who would put it. That way you please upload on the LMS. Clear?
Sure, Professor.
Okay. Thank you. Otherwise, great job.
Thank you all, Professor.
Thank you all.
Next is as per what we have, Abhinav's team.
Yes, sir.
So Abhinav, I give you the co-host.
Yes, sir.
Okay. Let me remove Manish Zola. Yes, Abhinav.
Hello, everyone. So we are Cloud Farm Solutions, and as Cloud Farm Solutions, our target is to power up the farming to next level. Being we are the tech-savvy people from farming backgrounds, and we have grown around the farms and have observed the technical as well as the physical ways. So to present our business plan, I'll hand over to Abhishek.
Thanks, Abhinav. Good afternoon to esteemed professor, fellow students and colleagues. So before proceeding with the business plan, I would also like to bring the ideology behind the proposed solution that we have right now. So very true to the name which Abhinav mentioned, Cloud Farm. So right now we are a mix of cloud-based computing solutions directed at farming sector especially. With the Cloud Farm, we are having vision to enable the innovative smart farming solution to help farmers overcome their productivity and financial challenges. Our board of directors experience skill set is also into IoT, product management and agricultural engineering. This generates a strong mix of the creative ideas to seep in and generate alpha level of the output. Coming to the business plan directly, a famous line comes into my mind when we think of the planning quote: a goal without a plan is just a wish. So a sound business plan is a prerequisite to a firm business foundation. So if you look at the VMOs over here right now, so the vision directly specifies that we want to make the world a better place. That is a long-term perspective. From the mission perspective, agriculture is the belly of the economy, and there is a need to do value improvements in the interest of nature as well as the nation. From the objectives perspective, we are looking at digitization of the agriculture with real-time data and analytics-based solutions. Yeah. Coming to market research, so research is just a formalized curiosity. It is poking and prying with a purpose. And if we look at the market research perspective, we are mainly aiming from the geographical distribution perspective. And our target market, inclusive of the market expansion, is that we would be aiming not just the farming sector, but also the suppliers to the farming sector whosoever are supplying the machines perspective to that. If I see the market expansion perspective, everyone wants to live on the top of the mountain, but all the happiness and the growth occurs while you are climbing it. So the market expansion is the main crux of our business development. And I think once we establish our business within the India, we will be planning to expand it to the global level as well. From the service perspective, if you can see, we have some products in line, which are definitely aimed at improving the agricultural engineering and giving smart solutions to the farmers. So I'll just go into very brief about it. So we have a smart flower which behaves like a sunflower, and it will be following the sun's direction, and based on that it will absorb the radiations and give the power and energy to the farmers and the agriculture sector. One Water is a sensory based solution which will be analyzing how much water has already been supplied to the soil or the crops, and if that much supply is enough or not, because most of the times farmers end up overdoing the water supply. So this keeps a tap on that. Greenhouse analytics is, I think you are all familiar with the global warming situation, and I think this taps into the energy of the greenhouse, and based on the data engineering, we would be able to come out with proper solutions based on that. Inverted canopy, it is nothing but a inverted umbrella, and the main purpose of the inverted canopy is that it will contain all the radiations, and based on the radiation sensors, it will start flowing the energy back into the service lines or maybe the crops that we are working around. Next, we have the plastomics. Plastomics is nothing. Earlier, we were doing mostly the nuclear engineering, but right now, plastomics is a very new technology, and we will be able to do the chloroplast engineering. And the main benefit is that we will be able to aim at specific genes of the crops and not just the entire crop. So we can get what we want with plastomics. The rain alarm circuit, as the name suggests, it is mostly general indication about the incoming rain, so that the farmers can accordingly plan their farming and the crop needs. Yep. I think from a service perspective, this is the one. And now I would like to hand over the floor to Saranya. Thank you.
Hi everyone, Sania here. Thanks to my teammate Abhishek who just presented before. So I would like to start with a management overview and quickly introduce the board of directors for Cloud Farm Solution. Our board members are Abhishek, Neha, Satya, and myself, Saranya. So next, let's look into the operations. As part of Cloud Farm Solution, we import most of the supplies like solar panel, microchips, sensor, etc., and get other raw materials that are available in India. Once we have a raw material, we would assemble and set up a plant in Gujarat, since we have a harbor and other facilities in Gujarat. Initially, we have 4 distribution centers in India, Chandigarh, Lucknow, Pune, and Bangalore, which would eventually be made available all over in India. Let's look into the financial forecast and budget plan. Next slide, please. Yeah. Financial forecast highlights the estimated profit and budget plan for Cloud Farm Solution. The key highlight is when we would make a profit of 1 crore approximately by end of 2023 and have 5 lakhs customer. And 5 lakhs customers approximately. The pie chart next to the financial forecast indicates 20% from government, 50% from investor, and 30% from equity every year. So quickly, let's see the very key milestones of the product solution. On July 2020, We have outlined the strategy and product development. And next on September 2020, we have drafted a product description, business plan along with the target position and various analysis. And to explore the potential opportunity in current market, we decided to have a prototype solution and a fundraising from investor by October 2020. Once we have record fund, we build and soft launch the product in March 2021. To see customer attention and officially we launch a cloud form solution by June 2021. Thank you. Now I hand over to my teammate Abhinav. Yeah, thank you.
Hello everyone, let me start by a fact that agriculture is an important and huge part of life. It's nothing to remind, but everyone is aware of its problems, benefits, and what is the significance that it plays in our everyday life. Now, I would say that agriculture is better when it's smart. Now, farm the smart way is to collaborate with latest smart technologies to optimize farming productivity. Now, to do that, we have empowered it with analytics to get a better yield and have a accurate crop rotation evaluations, reduce the environment footprint, and provide much more capabilities that the farmers have not yet tapped into, providing them better solutions, better suggestions, and a better way like how they could be getting more benefit in less amount of time and make proper use of the nature's resources. By this, you can make most of your money and make better use of your money. And on top of that, this venture is no less than an untapped money spinner. Thank you, everyone. So I will hand over to Neha for 2 minutes.
Hi all. Please move to next slide. Yeah, so in this 2 minute pitch, I'm going to give you a brief detail about our project. In the current scenario, it is evident that India is in the midst of agricultural evolution, whereby modern farming systems meet international quality norms and emerging alongside with the traditional agriculture system. So we built cloud farm solution to play a catalyzing role in the ongoing agricultural revolution from traditional to modern farming practices with emphasis on issues of inclusiveness and sustainability in the agriculture. Now, what we are what we are these smart solutions we are providing to our customers. Our cloud-based platform includes services such as solar power energy, which will reduce dependency on the external energies. Services of weather forecast will help farmers to be well prepared in advance for the weather conditions and grow crops. Our cloud farm services are committed to provide technical support, network resource combined with the out-of-box thinking to identify successful practices and models. So CloudForm solution is focused to provide a complete package to customers, which includes multiple options to increase their productivity by applying these standard and advanced agricultural smart solution techniques. All these combined solution will help our consumers and also will be smart way of income in many ways, such as via IoT technology, customers get readily available and accessible management through smartphones, tablets, and PCs. Sensor robots, drones, and cameras will be placed on farms to monitor and operate their fields. With clean energy, there won't be any wastage or harm to the planet and would be economical and like an analytical module. It is one-stop solution for managing all the operations pre and post harvest. Higher yields as inputs will be optimized and constantly monitored. So hence our cloud-based platform is a futuristic model, and our yearly and monthly subscription plans with the various ranges we discussed like premium, pro, and economy. It will be a smart way to earn potentially hitting about 5 lakh customers within a period of 3 years of our launch and forecasted revenue of around 20 million. And definitely it will be generating profits for our investors and shareholders. Um, So now I hand over my PPT to Abhinav.
So hello again, everyone. As I was also telling you in elevator pitch that our day doesn't start without going through agriculture. The things we use, we consume, one or the another way, they are connected to it. Anywhere you go, you can't survive without it. Being so important, we are less aware how to improve it. Agriculture today has many dependencies and complications, and which is blocking its advancement. And without its advancement, we are not able to fully utilize the potential we have as as a technical, as a mental, and as a physical even. So let's see like what are the problems that agriculture has today. Coming to the irrigation part, we have a low efficiency of water usage, unsustainable water practices, which leads to depletion of groundwater and lot of wastage of water. As you are already aware that usable water in earth is reducing day by day, and with these things, it's a problem for agriculture too. There's lot of dependency upon monsoons. At some places, it's totally liable on monsoons, which is declining rainfalls and unpredictable rains that are causing lot of problems. Unpredictable rains lead to destruction of crops, and declining rainfall leads to droughts and other type of soil erosion, etc. They are limitless harmful things that are happening due to this. Next, we have the lack of storage and food processing units. Due to this, we are resulting in loss of surplus. Like we have made what we have to consume, but we always have a surplus amount that is not sometimes exported, but we are not able to use them because of these lacks of proper storage facilities and processing units. And last is the poor crop pattern and misuse of fertilizers, which led to depletion of soil nutrients and harmful effects on environment. Now let's start thinking smart. So by thinking smart, we have solar power. So we are using the solar energy to empower it and feed our appliances and other nutrients values, and also not only using it to power appliances, but the solar power can also be used to keep track of the climate, environment, and other features which could lead to data collection that is used for the analytics. Next is the water gleaning. Water gleaning techniques are very old in India and are practiced, but they are not as efficient as they used to be. There are various ways that we could be having water gleaning. The inverted canopies that not only convert solar radiations into electrical energy, but also is used for water harvesting. Water treatment plants to get as much a useful water without depleting the groundwater. Rain tracker to help farmers plan their crops and also to save the water and help us making it clean energy solution network. And now let's power up all these smart things with analytics. Agriculture analytic modules not only will analyze the data collected by these latest things, but also provide proper suggestions and the techniques that farmers could use to increase their yield and make more profit out of it. So this is a new way that we are proposing. On your left, you could see one prototype blueprint diagram that what is the actual plan that our solutions are providing to farmers to be ready for the next step. Solar power appliances to make it more useful and cheaper for farmers to farm using advanced smart water harvesting techniques, so which could provide us better track of like how much water is being used and how you can use it efficiently, and providing that whole data connectivity. And we have inventory trackers also to properly track the yield and have proper suggestions of the pricing, storing information, and could And government also could use these tracking facilities to track like how it should be preparing the budgets and all. There are mobile notifiers to notify the farmers about the incoming rains or depletion of nutrients or requirement of fertilizers depending upon the analytical data that has been collected by our appliances that has been stored in the farms. We have an analytical cloud module set up behind the scenes, as you can see, which do this all data collection and analyze like what could be done to have a better yield or better income. Algorithms are designed specifically as per the needs. So our team goes to the farmers, see their solutions, and accordingly, algorithms are custom designed to their best use and to provide them the best service as possible. By this module, earlier when farmers were used to hope, like I have planted and hope for best, now they can act upon it without relying on hope. They are ready to tackle whatever the problem it is. We are empowering them to be ready. This is now I'll present to you our vision, like where we see ourselves and how we want you to see ourselves. Today we have prototype of solutions ready for testing. We are
Vinam, slightly faster, please.
Yeah, sure. We are partnering with manufacturers to provide solution delivery. By end of first year, we are releasing our first range of solutions with government supported. We will be launching to Indian market using subsidies and government tenders. By third year, we are planning to launch AI-driven solutions and enter international markets. By fifth year, we are plan to be dominant smart solution provider and file for IPO. Thank you everyone for providing us this opportunity to represent CloudFarm. Thank you.
Yeah, for lack of time again, it's a very good presentation and very detailed, in fact. Just a little thing is, add a little more financials after, especially today's session. Add the financials separately under who presented what, you please put it on the LMS. Otherwise, a very nice idea, very well researched and put up presentation.
Thank you, sir.
Thank you.
Thank you, sir.
Ashutosh's team, please.
Yeah, Professor. Shall I share?
Yes. Good to go.
Hi.
Srini, can you mute yourself, please?
Yeah, Srini is going to start, Professor.
Oh, okay, fine.
Okay, can I start, Professor?
Yeah, sure.
Great, thank you. So let me start with a real experience that we came across. Alena, our friend, is working in Bangalore IT sector and got extended working from home option. She's not a resident of this city right here. She wants to go to her native now, but confused what she would do with her household equipment. She loved her sofa the most and never thought someone would take care of it as much she does. She was looking for an option, and this flashed us how big this idea is, and this idea has a long life. Alina is one of us. Bangalore is a city with huge employment opportunity to people who came from in and out. In this pandemic, people do not want to stay rented anymore when they have an option to go to their native, but continue their employment. What would happen to their household items, be it shop or corporate? And it is also an emotional sentiment when it comes to items that we buy. Most of us do not want to sell it for a less price, or even would not like to sell it. Paying rent when not staying in Bangalore doesn't seem to be one of the best options. We also have people who go for long travels, and sometimes they're forced to clear off items before they go, and they incur a lot of loss. Now, our specialized knowledge and expertise in the storage areas with best facilities in the world is the best option you can avail if you are in this situation. We have planned to work this even beyond with FMCG storage, household storage, corporate and shop storages depend on your need with a customized plan with a great affordable price. Our company name is Storage, and we will walk you through our business plans in pitch. Ashutosh is the CEO and I'm the CFO for Storage now. Let's move on to the second slide.
Yeah, Sini, I must say it's a wonderful start because what you have done is you have related a real life scenario and said that this is the pain point and this is the problem and we have a solution for it. Very good.
Yes. Thank you. Let's continue to the next. Now we have done a little more analysis on the market, why the techies is living, and we have done a little bit of research on the storage and on rent demand. Now, I have already explained what is happening around and what solution we are giving. Let's move on to the third slide, please. So when you have this situation, we have the solution. So you can log into www.storage.com and you can locate us, book, store, and enjoy. Just a click away for you. Let's move on to the fourth page. We have now, what are we providing? We are providing world-class storage facility. We have a covered truck, so you wouldn't face the transportation issues. And we have the best equipment in the world to store your items safely, securely, and with no damage. We are also having a very good facility, I mean the plant, and with a lot of ventilation and a good flooring, as you can see on this slide. This is how we have planned to start the business. Let's go to the fifth slide. This is we have to avoid theft or any other problems, unforeseen problems. We have CCTV camera running 24/7 and installation when it comes to weather, when it is rainy or when it is summer. To avoid damages, we have installation facilities and good ventilation and excellent floor quality. Unlike before, we have come to a steel structure. I will be explaining it again, and packing with an excellent way of with boxes and bubble wrapping. So your storage, your household equipment, or whatever you have given us is very safe with us. Let's move on to the sixth slide. So now we store anything you care, as the statement says. We believe that we care for you. Now with integrated fire control and fire alarm systems, we're providing double security to your products that you are storing with us. Now with dry clean in better workers, better workers. We are even outsourcing the employment that's coming with us. Now better storage facilities with no theft and harm, because we using the intelligence, the artificial intelligence every bit to protect your products with us. Now, and we also have a very good introductory office and professional advice. Whenever you have a question, we will have the answers. We have the answers for you, and we really looking to do better with the service that we provide. And we always at your doorstep to pick up your things and store it, and that is quite hassle-free. Let's move on to the next slide. Thank you. So the warehouse construction, which is very important, you would be curious to know where we are storing it. What is the condition? Is it going to be safe? Is it somebody's going to use it? What about theft? What about some fire or some issues that is coming up? We have the best structured warehouses. We have what we are planning is making the best structure with all new technologies. And we have two specifications here, if you noticed, the capacity and the cart that we use and the storage inside. and we're using the better materials, better cars to pull the to lift the materials, storage, multi-storage is what we're looking into. So this is about what we have got for you. Now from here, Ashutosh will take over and will explain about the rest. Thank you all.
Yeah, thanks, Ini. Why we have chosen this idea, and so currently we are staying in a pandemic era where and everyone knows how it impacted business as well as the communities. So and also we are seeing the businesses nowadays shifting towards remote workers. So which is like in traditional way, they want workers to come to office and do their job. So we want to capitalize this era and with providing a better a safe house, a warehouse solution for the end customers. So with this, we want to be a market leader, one among the market leader in the warehouse business. And down the line in 5 years, we have a plan to become a business leader. So I'm just showing some trends where like the automation or robotics used in the warehouse from 2014 to 2025. So now our safe house is having equipped with and latest technologies where we have the automation, robotics, self-driving cars, as well as it built on the next gen software stack. We also having that online platforms where user can, which is available for customer at their fingertip. We also incorporated the cloud infrastructure and IoT and AI ML technologies so that to monitor the product of the customers, which is stored in our safe house. So like kind of environmental, we have that environmental factors like moisture. We can monitor the moisture, temperatures inside our warehouse, and if there is any issue, we can send an alarm, and through cloud it will reach to that online portal. So with this, moving to the next slide, where what we have is it is the global market possibilities, where we have a pick and where it is like the segments are we have this donut chart kind of thing where we have pick and place, palletizing and depalletizing, transportation and packaging. So this Indian warehouse market was worth 615 billion in 2019, and is and it was like it's a globally only. So it's a logistic automation topped $553 billion last year. So forecasted to be exceeded $80 billion in 2023. So we just come up with our startup calculation where we have initial cost estimation, setup cost estimation 50 crore. In that we have land and building of 10 crore of 150 acres. That is outskirts of Bangalore in rural area. We have machinery of 7 crores. We have like a special covered transport facility of 2 crores. And we have IT infrastructure such as cameras, sensors, IPs, biometric securities, barcodes, other things we have kept for 1 crore. And for making the building rainproof, pest control and other things, weather control mechanism, that we kept as 2 crore, because we have to keep our customer product very safe. Instead of that, we have operational expenses we kept as 50 lakhs. So overall initial startup is 50 lakhs, and we invested, like we expense we whatever we expense, right, that is comes around 23 crore, and we kept 26 crore as a buffer. So it's our so now next slide is our investment plan. So we have 10 crore from friends and family, 20 crores from investor, bank loan of 20 crore. It's based on the short long-term loan or short-term, as well as based on the loan based on the property. Profit we are expecting by end of 2022 is 100 crore. and we are luring investor with the profit of 0.5% annually. So this is our initial cost, and this is the cost we already purchasing land and other things, equipments. We already spent 23.1 crore turnover in 2021, expecting 25 crore turnover in 2250 and turnover 2384. So profit estimation by 2021, it is 0%, 22 40% and 23 80%. So okay, so it's based on the market research, we have segmented this in it's a storage product, and it is placed currently in Bangalore. Like, we are giving service only for the Bangalorean, and we have that facilities, warehouse facilities in outskirts. I said, so we have in pricing, we have a two plan, short term and short distance and long distance. Short term and long term. If user wants their belongings to be stored for short duration of time, so it depends on the service subscription. So we are starting from the 2000. For promotion, we will use the search engine as well as social networking sites and hoardings. So we warehouse your belongings safe as you would do.
I think we've lost Ashutosh a bit.
Hi, Ashutosh, you there? Okay, sir, I'll continue.
Yeah.
So we warehouse your belongings as you would do. This is our USP, and the rest are the 4 Ps. The storage is our product, and we are located in Bangalore. And for promotion, we are using social networking site hoardings and SEOs. We are optimizing those. And our price is 3 months deposit and monthly rent starting from 2,000, depends on the service description. So give me a second, I'm logging into the laptop.
Okay.
Okay. So, okay. So now, in short, what we do, we have listed what, where we're located and what.
No, I think I have to give you the co-host access for you to share your PPT.
Oh, yes. I think he's sharing it now.
No, not yet. So I'll give it to you or what?
Yeah, if you have, sir, please. I do not have the sharing option.
Yeah, I've given it to you. Please check.
Oh, okay. Let me just share it. Share. Document. Oh my God. A second, sir.
Yeah. While Sini is figuring out, except for these, extraordinary circumstances, generally we came up with the CI so well, and with the presentations and interactions and all that. Unfortunately, due to circumstances, we could not continue like that. But it's okay. Whatever time we have had, I think we've used it very well for the entire class.
Sorry, Professor, so there was power cut. So can I share?
Yeah. Okay. Yeah, you want me to? Okay, I'll make you co-host also.
Yeah.
Okay.
Yeah. So, Sini, can you explain further?
Yes. Can I start from where you left, Ashutosh?
Yeah.
Okay. So in short, what we do, we've just described, we have got friendly workers and we value for safety. We also have free visit to the location on prescribed time, and we have 24/7 cameras, so you can look into what is happening to your product. which is and minimum rent as per industry standards, and we have got very good insurance in case of any damages, theft, and anything, and good safety measures. Now let's move on to the next. What we would like to partner with the Amazon, Flipkart, BNB, Myntra, LIC for the insurance, and we are expecting a good investment from these. We would like to pitch in the investment with these. For now, we have currently thinking of partnering. And apart from that, corporates, hotels, shops, individuals are going to be our stakeholders, and FMCGs, that's something that we are looking into for long term. And travel, anyway, we have got it in our kitty. And the next
Why do you want to partner with Amazon, Flipkart, Myntra, please?
Because for the FMCG projects, with the current scenario, if they would like to store their products, we would like to pitch in and
Additional. Okay.
We would like to take that opportunity. Okay, thanks for that question. Now, let's move on to the 16th slide. We are talking about the risk assessment. We already have analyzed the risk and foreseen the safety measures that need to manage the risk. So we know that environmental issues can be caused, or employee safety has been taken into consideration, product damages, how to mitigate is something that we have already planned, and we have a better management system in place now. With that, we have also analyzed, let's move on to the next. We have analyzed our competitors and their strengths, and we know there are a lot of people in the market, but we would like to use the current opportunity to get into the world, the business world, and be a number one. With that, I will close this presentation, and thank you for your time.
Yeah, very nice presentation.
Thank you.
Where are the pitches?
Pitches, actually, sir, we covered it in the whole presentation. We did not really break it into.
Yeah. So kindly break it so that to repeat for the entire class. How you do is, I know only few of your team presented today, but whatever you planned earlier, two from the team of 5, 2 of you will be uploading the same business plan and on the LMS. The other 3 will be individually putting up the 3 pitches.
Okay, sir.
The elevator pitch, make sure you do it, and that if time permits, maybe the person can explain tomorrow. The 2-minute pitch, which can be presented by someone else, and the longish pitch. So 3 different people uploading individually.
Okay, sir.
Yeah. Otherwise, the plan is good, very well thought out. I just thought maybe you have to work on the financials a little more, and if possible, all the teams try to incorporate as much financials as possible. If possible, all the 3 financial statements.
Sure,
so
sir.
Nice presentation. Thank you.
Thank you, sir.
Sir, it's Kumar, right?
Yeah.
Kumar, can you share the presentation?
One moment. I will.
Yes.
Whom should I now take off?
Okay.
I'm just taking off somebody. So.
Sure, no problem, Professor. Yeah. I'm just talking so that you can see my name on the top, and then you can easily assign us first.
Good. As soon as you unmute, you are there on top. So.
Yeah.
Yeah, so somebody can end this. Yeah, now fine. Continue.
Okay, I am trying to share my screen. Please let me know once you can see it.
Yeah, I can see it.
Okay, great. Diksha, would you like to start?
Yes. Okay, thanks. So we are from Smart Group to present our product, the Smart Card. So one nation, one card. So I'd like to introduce my team here. We have Kumar, CEO, Smita, CFO, Ekalavya, Chief Digital Officer, Karthik, CEO, and myself, the marketing head. So Smart Card, which is unique and almost every citizen would be excited about, which includes national security number, PAN card, voter ID, bank authorization, passport. Okay, it so happens that we need to carry all the documents in our wallet. So during this pandemic, as we cannot carry lot of stuff, when we go out, we have to sanitize and other things like that. So we believe this will be useful to almost all the citizens. So with this one card, we can keep all the documents behind it. So in simple, I can just tell it will be one card replacement to all the multiple documents plus banking cards. Okay. So our target customers are all India citizens and NRIs. So we can target on all the citizens of any level. So I think it will not be so expensive as well to opt for this. And Digital India. So Digital India, I mean to say, is a flagship program of Government of India with a vision of transform India into digital empowerment society and knowledge economy. And we are targeting on One Nation, One Card Yojana. Government are planning for this One Nation and One Card, one. Okay. So, and it is economic and reusable. So it is something good about it, and accessibility, quality of being, easy to obtain or use. And it's secured. There'll be no scam. Such security would be given from the government end. And we can recycle, so we can convert into, reusable material. This is about a target customer. So I will ask Ekalavya to please take it forward. Ekalavya?
Hi Diksha, thank you and good evening, Professor and all of our friends here. Here I would like to discuss why this idea of this business. Before moving to this business idea, I would like to present here a small live chat with the two friends who are going outside out in the market. So Kumar, are you there?
Yes, Eklavya.
Yeah, Kumar, this brand new Kia Sonet really excite me a lot, and I want to purchase this. So, but due to something, and uh, I am unable to fully support on the financial terms. So, can you please help me out on this case?
Absolutely. I have multiple credit cards. You can choose one of them. Maybe you can go with HSBC or Citi. They've got good offers.
Oh, is it like that? I mean, I do carry a lot many cards, but this is really very difficult to remember the passcode for all the cards and what offers and what particular time we are getting. So how do you manage that?
Oh, I carry a huge bag with multiple cards and documents whenever we need it.
Oh, is it like that? But do not you feel really bored for that?
I do, especially when we have to sanitize in this pandemic.
Yeah, and for me also, I'm quite bored, and then now we have n number of bankings in the market, and then everybody is coming with a lot many things, and they are providing to have this much credit and this much credit, and most important, you have n number of cards, and you have to get all passcode to have to maintain differently, and otherwise we have always an issue of being scammed somewhere. So
Yes, indeed.
okay. Thanks. But thank you very much for your help. So, Professor, I'm coming back to the slide. So, this is actually really need of need of the hour for the business. Actually, we have every individual who are especially in this metropolitan city will have a number of cards, maybe 4 or 5 cards will be there for everyone, and apart from that we have PAN card, ration card, Aadhaar card, passport, everything, and then it is really very difficult to carry in the market. This is something we want to move in this particular time to have a change on that particular area. We have focused on one nation, one card, which will carry each and everything: your passport, your PAN card, your all banking financial facility, whatever you have, whatever the maximum benefits you can get, that will be involved in that. So now we are coming to the customer base. So yeah, it's not a problem to us at all, because entire India we have around 1.4 1.3 billion people who will be our target customer. So now safety, let's talk about the safety. we never knew that the pandemic will come when the railway wheels will stop on their track from 90 from the day of their startup. And it's really very tough time for everyone to maintain themselves, and they have to be safe at any point of time unless until we do not have the vaccine in the market. So we have to transact the money and something. So in that way we need to maintain a one single card which should be contactless to get all the daily need done. So now if we are talking about the business and government policy and the government regulation, we have NPCI, which is National Payment Corporation of India. We are under discussion with them, which we will really discuss, and we are in touch with them to maintain a single card such that the entire transaction will be very simple. This card will be highly infused with the all technological views such that it will be really secured. It will have the facility to maintain the biometrics. It will have the fingerprint, retina test, and all personal identity, which by which only it can allow to transact it. So this will be really secured card. Now if you'll see the things, it will be really sustainable market, because we will have one single thing and it will be really move in the market to further development. So Kumar, shall you go for the second slide, please? So USP, again, if you see about the chat, we have only one card. It's really nowadays, I mean, personally, I maintain around 6 cards, and it's really tough to remember all the passcode all the time in my mind. So as we suggest that we should not put anything written anywhere else, otherwise there is always a chance that you will be get trapped by some cyber crime or something. So it will be very easy for us to remember one card with one passcode. So this is the biggest USP what we have. So hand over to you, Kumar, please.
Thank you, Eklavya. So we are Smart Group. We primarily work on this digital payments as well as a one nation, one card concept. If you also see, this is our company logo, where we also try to metaphorize that we are looking at digital India in terms of growth. So our product, we have one card for multiple usage, and along with the purchase of the one card, a customer will get a portal as well as a mobile application where they can manage all the cards. They can block it, unblock it, change the pin on the go, right? There's no need to visit any center to do this, just like you do it in case of your banks, right? And this is a monthly subscription based, just like how your Netflix and Amazon subscriptions work. On the go, you get 6 cards free, and then you need to add up on the top of basis based upon number of cards that you would like to use, right? The 6 cards includes the basic identity cards like passport, Aadhaar card, your PAN card, voter ID, and so on. Getting into the technical details of the solution, how does this solution work is we have the government database that comes from the Aadhaar card, and along with Aadhaar card, every citizen in the country will have one personal identification number or the social security number, whichever you call it, and then which is integrated with the smart card that we have it, and the customers and the merchants will be able to use the smart card using the NFC reader that we will have it with the devices. And customers as well as payments, the merchants, suppliers, everyone will have access to a web portal where the transactions are captured and integrated. And the whole solution is cloud-based technology. When it comes to security, of course, it is highly secured. We are talking about 128-bit security with TLS 1.2. We are also talking about the blockchain encryption, which is at least proven till today that it cannot be broken. That's what currently the large financial transactions uses between one country to another country. And we are also talking about quantum computing here because that's the fastest encoding technology that we have it on the planet. And the transaction ratio or the transaction response is quite high. When I talk about the 2-minute pitch, basically, I just spoke about the elevator pitch. And when I talk in detail about 2-minute pitch, I'm talking about 3 different concepts here. One is we have a problem because we have not only a customer problem that they carry multiple cards, but it's also a complex architecture that we're talking about. So many merchants, so many, I'll come to the statistics in a while, but then so many merchants, so many gateways, so many banks, and then it is very difficult to manage multiple with terms of digital India, right? So, but what we want to do it is get into one gateway, one card per user, and then make it simple and agile. How do we do it is very simple, that your all cards will be replaced with one simple card, right? But what is the tangible benefit that you get as a customer is for you, all your all your complex integrations are done or taken care in the back end with the help of technology, right? Very significant difference that you find it is your wallet will become very simple. It's very easy to carry a wallet. This can also be used in terms of digital currency. You're taking a flight and then getting into a different country. It's easy to swap your card instead of showing your passport, and then your visa and everything is digitalized, right? Of course, it is sustainable because we are talking about saving so much of amount of paperwork and then lots of transactions, slips, receipts, and so on, right? Of course, it increases a bit of carbon footprint, but then the amount of paperwork that it replaces is very, very clear, right? In terms of numbers, we are talking about 1.353 billion customers, and I'm talking about 300,000 suppliers or merchants within India, right? And this can also be a global solution depending upon the situation. When it comes to the investments, how do we look at is since this is going to be a global solution, we have a very strong ambition that our FDI investments will be directly allowed by the government, and we will plan to integrate with the big marketplaces like Jio, Tata, Reliance, so that we can already use the existing 5G technology that is coming into India. Our track record, we come with a huge investment strategy, and then our success ratio also talks about our previous products. Then I would like to invite to Smita to talk a brief about financial report and forecast. Over to you, Smita. Smita, can you hear us?
Sorry, I was on mute. I'm
Yeah.
so sorry. Yeah. Thanks, Kumar. Hi, good afternoon, all. This is Smita, and to present on the to talk on the financial forecast. As Kumar, as my team has already stated about, we are looking forward for the initial investment or for the total of the investment to be coming out from from the government. We see as this is a global solution, we expect government to invest on that. The whole of the population is a target at one go. So it should be only made we have a plan, like it should be made only available at government centers with all verification and data intact, so that the clean proof or the fraud detection can be under control. And this is what we are looking ahead in the year of 2020-21, like if at all we start with, because with a long go, this has to be we plan like this has to be a mandatory thing with anyone and everyone in the country, India. We start with minimal registration charges that has to be decided by the government, but of course we have not currently decided on the software that we are going to use, and we will definitely come up with the financial cost sheet that will be involved for the technology that we use for a single card that is required, and then there will be add-ons of course on that. So there will be charges for verification as and when any changes if required, if at all you sometimes there will be charges for verification, and there will also be charges for replacement or or if at all the card is lost or that way. So this is all from my end, and thank you so much.
Thank you, Smita. And then moving on, what we see is welcome to the smart future. Thank you for listening to us. And if you have any questions, probably we can
Just to
take them.
add on, I think I just to add, like if a few of us would have been to the UAE airport, you might have seen when we enter the airport, or you just stand in front of a machine and it takes your retina. It takes you need not, and it's just a what I can say. It's just a 1 minute task. Everything gets verified and you get a clean sheet and you are allowed. Your immigration is done. So that this is what we are planning for India. Not and this the higher scope of this is like we can also implement in the airport with that single card maybe, or we can also implement that way. That's what is our next milestone after getting this done. Thank you.
Thank you.
Yeah, very good idea. On a lighter note, this is like, we're all hooked on to something. The Illuminati is controlling us, going back to the Matrix. So it's like, if you put all in one, obviously already people are collecting all the information of ours. So on a lighter note, I was telling you, it's so easy that, there's total control by people. But yeah, if you actually take it forward as a business, I think it's a very good idea. The only thing is, I'm not too sure if have you done some groundwork if the government is willing?
Yes, there's already a yojana which is launched and government is working towards it. It's called, I'll bring it to it. I have a very bad memory. It's called One Nation, One Card Yojana. This is primarily for the digital payments,
Yeah.
right? Not towards the national identity, but then our idea is to infuse into that. But then the corporations like NPCI is already working into it, and Beam is one of the open platforms which is already available. So for example, when we look at the Google Pay and Phone Pay or Paytm or other applications where you have the UPI payments, this is part of this large vision from government that they
Right.
wanted to have the payments from one platform as such.
Yeah,
And
no,
I would
the
also
other
like
reason
to
I
I
asked you
would
that
like
question was if the government does not work, then you may have to look at other sources.
Correct. Yeah,
yes
but the
I would
government
like
is
to,
the government base is the very motivating or positive points for us, because if you also look at our business idea, we go with the government policy, because these things are primarily controlled by government, and if government is looking at that direction, it's easy to implement rather than reinventing the wheel, right?
I would like to add on to Kumar. I would say like this actually this one card one nation yojana was planned by government. Like we all know about the demonetization that happened long before 2 years, and so this is also a clean sheet and a clean proof, and also to what I can say, to curb the facilitation of black money. I mean that was also one of the aims that government is trying to plan this way. So we wanted it to include all in that. So we hope and we really wish like government would really support us on this, because it's
Yeah.
really difficult to carry so many carts, and it's a wastage of time. Any airport we go in and all, it's nowadays it's taking a longer time to check in, check out, and do all your verifications and all that. And I believe most of few of us who have been to the UAE airport, like the how fast is the process over there. So maybe this card can get help us in doing that way.
Yeah, very much needed. On a positive note, this will happen, and it's good that you are there to facilitate the same. Good,
So
very good.
in addition to this, Professor, I just like to add something. I was last year I was there in Bangladesh, and then what I could able to see there, other than the banking cards, all the government card other than passport, they have a single card which carry their PAN card, voter ID card, and driving license. These three were combined together, and after that, the government is also looking for to such that they can even add the banking cards on them as well. So there means other than India also the work are in progress. So we think that this will be a really good start for us.
Yeah, good idea, good presentation. And like
I have a question. I'm so sorry. I have a question from Harman Kochar. If I lose my smart card, I can't pay. I can't open a new bank account, and it seems it doesn't. Thanks, Harman, for this question. I would like to take up your question. So, what in this case, what we would do is like you should reach out to get a new card with the record charges involved. But yes, once you lose, what you should be doing. I mean, you have that social identification number in that. That's only one number you need to remember, and anywhere you go, you just put your number, your bills get paid, you have your identity over there, so that should not, your details get taken automatically, so that should not be a problem what we are looking at for the technology to be. Thank you, Harman, and thank
Just to add, Harman and others also, I think this is a very, very important question when you're looking at this technology. The technology is not based in the card. The technology is based in the portal and the application that you have, right?
Yes.
So even if you lose the card, it doesn't matter. It's coming from the portal, and your data is not storing in the card. It's there in the cloud, right? So in that sense, your data is still safe and secure.
Exactly.
One identification number you have to remember instead of so many card numbers, so many 16-digit numbers and passwords, net banking IDs, and all that.
Okay, thank you. Run out of time. So excellent for those who presented today. Aishwarya's team who got this sugar idea, good idea. They came first, which is very good and a good presentation. Abhinav with Cloud Farm, which is very detailed. Ashutosh's team with Store IT, also good. Now with this Kumar Datta's team of Smart Card, very, very nice presentations, all of you. The others who are left kindly will start from 1:30 tomorrow. And I request all to be present so that I'm sure all of you will know that each presentation is giving us more and more inputs and ideas to take our ideas forward. So I look forward to all of you being present tomorrow, if possible. So we'll restart from tomorrow. Thanks one and all for today's presentation and the session.
Thank you, Professor. Thank you very much.
Thank you, sir.
Thank you, sir.
Thank you, Professor.
Thank you, Professor.
Thank you, Professor.
Thank you, Professor.
Yes.